On this vote, the yeas are 227, the nays are 190. The resolution is adopted. Without objection, the motion to reconsider is laid on the table. For what purpose, the gentleman from Massachusetts rise?
Mr. Speaker, I ask unanimous consent that all members have 5 legislative days within which to revise and extend their remarks on H.R. 1852 and insert extraneous material.
Without objection.
Mr. Speaker, I further ask unanimous consent that during consideration of 1852 in the Committee of the Whole, Amendment number 2 may be offered out of sequence by the gentleman from California, Mr. Cardoza.
Without objection. For what purpose, the gentleman from New Jersey rise?
For parliamentary inquiry.
Gentleman, the status parliamentary inquiry.
Thank you, Mr. Speaker. Can the Speaker please clarify for me?
House will be in order. Gentleman from New Jersey.
Thank you, Mr. Speaker. Can the Speaker kindly clarify within the rules of the House when a bill is final in the terms of not being subject to open and changing the votes? Is it when the board says final, or is it when the Speaker gavels the bill down, and at that point the bill is no longer...
Chair will inform the gentleman from New Jersey that the board is for display purposes, and when I hit the gavel to see if any members wish to change their vote, several members from both sides of the aisle indicated they had not voted, and I extended the courtesy to allow members to vote.
Further parliamentary inquiry, then.
Gentleman will state as further parliamentary inquiry.
Just so I'm clear, then it is not upon the board, nor is it at the time of handing the gavel down? Is there some other action that has to occur?
Gentleman is correct. The chair is advised that the word final appears on the board, on the wall display, as an indication of the status of the computer, not of the status of the vote.
And so then it is further parliamentary inquiry.
Gentleman will state as parliamentary inquiry.
So the final element of it as to when a vote is actually closed is when the Speaker, in this case yourself, actually handles down the gavel, not the board.
When the chair announces the result is the final tally of the recorded vote.
And I thank you, Mr. Speaker, for the clarification. I appreciate it.
Pursuant to House Resolution 650 and Rule 18, the chair declares the House in the Committee of the Whole House on the State of the Union for consideration of H.R. 1852. The chair appoints the gentlewoman from Ohio, Ms. Jones, to preside over the Committee of the Whole.
The House is in the Committee of the Whole House on the State of the Union for the consideration of H.R. 1852, which the clerk will report by title.
A bill to modernize and update the National Housing Act and enable the Federal Housing Administration to use risk-based pricing to more effectively reach underserved borrowers and for other purposes.
Pursuant to the rule, the bill is considered read the first time. The gentlewoman from California, Ms. Waters, and the gentlewoman from Illinois, Mrs. Biggert, each will control 30 minutes. The chair recognizes the gentlewoman from California, Ms. Waters.
Thank you very much, Madam Chairwoman. I yield to myself such time as I may consume. I rise in support of H.R. 1852, the Expanded American Home Ownership Act of 2007. As you know, I introduced H.R. 1852 on March 29, 2007, and I want to take this time to thank Chairman Frank for his original co-sponsorship. I also want to acknowledge each of my colleagues, both on the Committee on Financial Services and in the House, who have joined with me to see that this important legislation passes the House. It has been a little over 4 months since the Committee on Financial Services considered this measure to revitalize the Federal Housing Administration, or FHA. On May 3, 2007, the Expanding American Home Ownership Act passed the Committee on Financial Services by a vote of 45 to 19. The ensuing period has only made the need to enact H.R. 1852 clearer. We're all aware of the turmoil in the mortgage markets with a dramatic rise in foreclosures. Some predict as many as 2 million mortgage loan defaults by year's end. Equally troubling is the widening impact that the mortgage crisis is having within the domestic and global economy. We still don't know the full scope of that impact, but it is clear that we must take prudent steps to address the underlying issues in the housing markets. H.R. 1852 is a necessary step in that direction. To be clear, this legislation will not by itself resolve the crisis. Indeed, later this week, the Committee on Financial Services will hold a hearing to discuss the major players in government and the markets' other strategies to address this multifaceted problem. Revitalizing FHA, however, is an essential element of a comprehensive strategy. FHA is a federally insured loan program that for over 60 years has been a reliable source of affordable fixed-rate mortgage loans, especially for first-time home buyers. At the end of funding year 2006, FHA had $338.6 billion of insurance in force on about 3.9 million loans. From 1934 through the end of funding year 2006, FHA had insured about 33.9 million home loans at a mortgage volume of about $1.9 trillion. Once the preeminent provider of mortgage insurance to low and moderate income home buyers, FHA has seen a precipitous drop in its market share in recent years. In 1991, FHA loans accounted for about 11% of the market. By 2004, that share had dropped to about 3%. Borrowers have increasingly turned to the private subprime market for loans, many of which contained adjustable rates that are now resetting or will do so in the near future. In the absence of significant appreciation in the values of their homes, many of these borrowers will be unable to refinance to ensure affordable monthly payments into the future. H.R. 1852 will enable FHA to serve more subprime borrowers at affordable rates and terms, recapture borrowers that have turned to problematic subprime loans in recent years, and offer refinancing loan opportunities to borrowers struggling to meet their mortgage payments in the midst of the current home price and mortgage market turbulence. Specifically, this bill would authorize zero and lower down payment loans for borrowers that can afford mortgage payments but lack the cash for a required down payment, a major reason that many low-income borrowers turn to private subprime market rather than FHA-insured loans. Increase loan limits to make FHA relevant in high-cost markets. Direct FHA to provide mortgage loans to higher risk but qualified borrowers. Enhance the FHA reverse mortgage loan program, promote the sale of foreclosed FHA rental housing loans to localities so that affordable housing can be maintained in local communities, authorize up to $300 million a year for the next 5 fiscal years from the bill's excess profits for an affordable housing fund, instead of returning such funds to the general treasury. Notably, H.R. 1852 also includes a number of important changes to the FHA bill that passed the House last year. First, it eliminates the fee increases from last year's bill for borrowers that continue to make a down payment, scaling back the maximum upfront fee from 3% to 2.5% and the maximum annual fee from 2% to 0.55%. These reductions would reduce FHA closing cost premiums for a hypothetical family buying a $300,000 home by $2,250 and annual fees over a 5-year period by over $20,000 compared to last year's bill. This bill also includes a provision authorizing loan limit increases for FHA rental housing loans in high-cost areas where current FHA loans do not keep pace with local construction costs. In this way, we're ensuring that FHA contributes to the full range of affordable housing stock we so desperately need in this country, from home ownership to rental housing. In that vein, H.R. 1852 also differs from H.R. 1752 in a final, absolutely critical respect. This bill recognizes the full scope of the affordable housing crisis facing the nation by targeting up to $300 million annually for the next 5 years to an affordable housing fund for grants to provide affordable rental housing and home ownership opportunities for low-income families. This measure is clearly needed. We can thank Barney Frank for all of the work and all of the attention and time that he put into making sure that this was a part of this bill. Simply put, this country faces an affordable housing crisis of epic proportions. According to Harvard University's State of the Nation's Housing in 2007 report, 17 million renters and homeowners are paying more than half their incomes and housing costs. There just isn't enough affordable housing stock to go around. With that, and in closing, I've said for many years that there is an affordable housing crisis certainly in America. In recent months, that crisis has exploded beyond the poorest renters and homeowners to threaten the domestic economy. H.R. 1852 is a necessary step, though not in itself a sufficient one, in walking us back from the brink and in the direction of meeting the housing needs of all Americans. And, Mr. Chairman, I would reserve the balance of my time.
The gentlewoman from Illinois is recognized.
Thank you, Madam Chairman. At this time, I would yield to the gentleman from Alabama, Mr. Backus, the ranking member of the Financial Services Committee, for 7 minutes.
The gentleman is recognized for 7 minutes.
I thank Madam Chairman. Madam Chairman, the Federal Housing Administration, which we today call FHA, was created in 1934, and it is a very important source of support for first-time home buyers and for low and middle-income borrowers. FHA provides mortgage insurance that protects lenders against losses when homeowners default on their mortgage obligations, as many of them are doing today. It also allows the lenders to offer their customers, American homeowners, low interest rates and low closing costs. Since its inception, the FHA has insured nearly 35 million loans. That makes it the largest insurer of mortgages in the world. FHA's share of the mortgage market, however, has been steadily declining in recent years, falling from almost 20% 10 years ago of the total mortgage market in America to 5% today. This sharp drop in the FHA's market share resulted largely from the growing popularity of subprime mortgages, as more borrowers opted for loans featuring zero down payments and introductory teaser rates far lower than what was available from FHA. The difficulties we're experiencing today by many subprime borrowers as their initial low interest rates reset at a much higher level offer FHA an opportunity to reestablish its standing in the marketplace as a safe, low-cost alternative for American homeowners. And it's also another reason that we should be here today reforming FHA, to ensure that that happens. But for that to happen, Congress does need to pass the reforms that we're considering today. And I want to say that right up front. There are important reforms in this bill. These same reforms were contained in legislation that the ranking member Biggert of the Housing Committee and myself and others in a bipartisan way introduced in the 109th Congress. In fact, that legislation, comprehensive FHA reform, and that's in this bill today, and it's very good provisions, passed with over 400 votes on the House floor, only to die in the Senate. I'm sorry that happened. Earlier this year, Congresswoman Biggert and I reintroduced legislation identical to that legislation. However, and I'm sorry to say that rather than embracing last year's bipartisan approach, the majority has chosen to go in a different direction. And I think they do that from honest philosophical reasons, but we disagree with those reasons. They've included provisions which we believe will divert surpluses generated by the FHA program to a new affordable housing fund established in separate legislation, which this Congress and this House and our committee passed earlier this year. While a strong bipartisan consensus exists regarding the need for FHA reforms in this bill, the majority is insistent on linking the enactment of these reforms to the creation of yet a new multi-billion-dollar housing fund has caused many of us on this side of the aisle to hesitate from strongly supporting this legislation and to even oppose it, some on the floor, some later today, some in committee. when it was considered in the Financial Services Committee. And I admit most of our members are in a quandary. We like the reforms in this bill. We know that those reforms will go a long way towards addressing the crisis that we face today. However, the Affordable Housing Fund, and we realize at the same time that there's legitimate purpose behind the Chairman Frank's Affordable Housing Fund, and one of those is to offer affordable, low-income rental property for Americans. And we understand that he honestly believes, we have an honest disagreement as to the need for this. We simply believe that a better approach is to dedicate the FHA surplus to shoring up the financial solvency of the program, which was only recently, the FHA mortgage program, only recently removed from GAO's list of government programs at high risk for waste, fraud, and abuse. A portion of that surplus could also be returned to beneficiaries of the program. Who are they? They are the many people who've taken out FHA-insured reverse mortgages, many of them senior citizens. And we could do that in the form of lower insurance premiums for all Americans who have FHA mortgages. Madam Chairman, the key reforms included in this legislation: lowering down payment requirements, increasing loan limits in mortgages that FHA is authorized to insure, giving HA more pricing flexibility, command broad consensus among Republicans, Democrats, the Bush administration, consumer groups, and the industry, the realtors, the home builders, and others. Indeed, in announcing several of these initiatives last month, designed to contain the damage caused by the problem in subprime, President Bush stressed the critical role that FHA can play in assisting homeowners facing sharply higher mortgage payments and possibly foreclosure, and reaffirming the administration's support for the FHA modernization legislation and many of the provisions contained in this bill. However, the administration, as have many on our side of the aisle, also is strongly opposed to using the FHA surplus as seed money for an untested, unrelated government housing program, one that's estimated cost is $3 billion or more. Thus, by insisting that this bill carried that controversial provision, we feel like the majority is delaying, if not jeopardizing, the enforcement of important reforms that we need now to provide a lifeline for seeking to refinance out of high-cost subprime loans. If the gentlelady could yield me an additional 30 seconds.
I yield the gentleman an additional 30 seconds.
The gentleman is recognized.
Thank you. Madam Chairman, accordingly, I urge my colleagues to support Republicans' amendments to strike the extraneous Affordable Housing Fund provisions opposed by the administration and allow us to move forward quickly with badly needed and long overdue reforms in the FHA program. If we're not successful in those amendments, many of the members will vote for this underlying legislation. Some will not. But again, I want to acknowledge the sincerity and the good faith that the majority has worked throughout this process with the minority. And I'm very much, Chairman Waters and Chairman Frank, we very much appreciate that. We appreciate the many fine provisions in this bill. I yield back the balance of my time.
The gentlelady from California is recognized.
I yield to the chairman as much time as he may consume.
The gentleman is recognized.
I thank the gentlewoman, the chair of the Housing Subcommittee, who has worked so hard all year on a number of very important pieces of legislation, and I appreciate the kind words from the ranking member. I congratulate him on the newest addition to his extended family, and he correctly says there is a lot in this bill that we agree with. There are some things where we disagree. Now, the ranking member of the subcommittee, the gentleman from Illinois, and the ranking member of the full committee, I should note the gentlewoman from Illinois is no longer the ranking member of this subcommittee. She was recently moved, but she was during the pendency of this bill. They noted that last year a bill passed the House by 400 to a handful on the FHA. And that is true. And the reason is that's the difference between us and them. Last year, when they were in the majority, they came out with a bill that had some things in it we liked, a couple of things we didn't like. So we were reasonable and conciliatory and voted for it. Now we're in the majority, and it is an odd argument to say that the bill that they passed when they were in the majority, having defeated some of our amendments, somehow now, because we were conciliatory last year and supported it, we're obligated to do the same thing. The principle of deja vu all over again is not to be found in Jefferson's manual. It is not binding. We built on what we agreed to last year, and we added some things. So let me talk about where we disagree. Oddly, the administration insists that when we do mortgage insurance for lower-income people, we agree that going forward, and even in fact in helping in the current crisis, FHA mortgage insurance should be available for people with weaker credit who are in the subprime category. Now, if they can refinance at a steady rate in the future so they can go there in the first place. But what the administration says is this: if you are a woman making $48,000 a year and your credit isn't great for a variety of reasons, and you get mortgage insurance from the FHA, this administration and the approach of my Republican colleagues is to charge her more than any member of this House would be charged for the same mortgage insurance. Because what they say is we will extend it to people with weaker credit, but we'll charge them more because people with weaker credit are likely to default. It's true. People with weaker credit are likely to default. But should everybody with weaker credit be penalized financially because some people with weaker credit will default? What we say is, if you are in that higher risk category and you go forward and make your payments on time, you should be refunded that money after 5 years automatically, 3 years at the discretion of HUD. So I reject the notion that we should make the person in the lower credit category who conscientiously makes her payments be the one who has to bear the cost of a loan loss rate that's higher from people like her. That's not her fault. Secondly, we have in here tougher restrictions than last year on the ability of HUD to raise FHA rates. Members will know the FHA has been making a surplus recently, and the administration likes that, and they can use that to put into the general budget. So housing and the FHA subsidize the rest of the budget. And a couple of times on a fully bipartisan basis, through the appropriators and through our committee, we have written to HUD and say, no, don't do that. Don't raise FHA fees when you're already making a profit. This bill, in fact, reduces the ability of HUD to raise fees unless they can document that they're going to go in the red. And that's one of the differences. If you vote for the substitute, you will be voting for a weaker set of restrictions on HUD's ability to raise FHA fees. That's why the home builders and the realtors have generally been supportive of the approach that we are taking, because we don't want HUD to have the freedom to raise the fees just to make a surplus for the rest of the government, make homeowners do that additional surplus. In addition, by the way, we take the cap off home equity mortgages, and that's what generates the money. We don't generate money for the Affordable Housing Fund here by raising fees on mortgage insurance in general. In fact, we restrict HUD's ability to raise that. We do take the cap off mortgage insurance, so what we're saying is there will be more home equity mortgages granted. And in fact, we put a restriction on the fee that can be charged by those who originate them, not in the minority substitute, I believe. And we say that extra money that comes not from raising anybody's fees, but increasing the volume, is what we can use for affordable housing. We also say that you should raise the limit. Now, the administration has been opposed to that, and they're now for raising it some, but I believe not enough. We now have a situation in which the market is telling us that they will not do mortgages if they go above the FHA GSE limit. And what this bill does is, A, to raise the limit based on the regional variation in house prices, but in addition says to the Secretary of HUD, if the market freezes up, as it now does, you have discretion, the discretion of the Secretary of HUD, to do a temporary increase in the limits. And I think that's the reasonable approach. Finally, the Affordable Housing Trust Fund. Be very clear. Look at the bill. Not a penny can go to the Affordable Housing Trust Fund under the legislation before us today until the Secretary of HUD certifies that the FHA fund is fully solvent. That is, there is no way under this bill that a penny can go to the Affordable Housing Trust Fund if it would in any way cause an increase in FHA mortgage insurance or in any way jeopardize the fund. The question is, if there is a surplus generated by the mortgage insurance rates, remember, we are saying to HUD, you can't charge us much as you want to. So if at the lower rate we impose, and with the increase in the volume of home equity mortgages. If that generates a surplus, does it go into the Treasury to do as they wish, or can we set it aside for an affordable housing program? And for the first time, because you do not have now, there are a lot of HUD programs, but there aren't any now that help build family affordable housing. We have some for the elderly, HUD tries to cut it. We have some for the disabled, HUD tries to cut it. We do not have a general program for helping build affordable family housing. And that's what this bill would do. But only if, by raising revenue elsewhere, and by the way, when we increase, and there was an odd statement in which they said, don't raise the upper limit, have the program be focused on the lower income people. They're not competitive. In fact, raising the upper limit makes money for the FHA. CBO has told us that when you raise the limit, that's a profit for FHA. In fact, raising the limit at the top is one of the reasons why we can avoid charging the people with weaker credit more, which the FHA wants to do, because we recycle some of that profit that they will make from writing the upper end into helping offset the higher loan loss rate from people at the lower end. So the notion that in any way we are deteriorating our ability to help the moderate income people is just nonsense, literal nonsense, because raising the upper limit, all it does is provide more funds which can be used, because the alternative, and again, this is in the Bush administration's approach, yes, we'll extend credit to people with weaker credit, but we'll charge those individuals more than somebody who's richer, even if that individual is making the payments. I don't think that's appropriate for the federal government. There's been a lot of bipartisan cooperation on this bill. There are a couple of amendments offered. One amendment is jointly offered by myself, the gentleman from California, Mr. Miller. There are amendments offered by the gentleman from Ohio, Mr. Tebry, which we think is a good idea. Mr. Miller has another one dealing with down payment assistance. Mr. Tebry's deals with the question of counseling. We're supportive of those. There's a great deal of bipartisanship here. The realtors and home builders, two of the private sector groups strongly committed to helping with home ownership and home building, support this bill and support our versions of it. All of the consumer groups, the people who advocate for low-income housing do. I hope that the bill is adopted. There are some amendments that would kill it. I will say there is an amendment to strike the funds for the Affordable Housing Fund. Members might want to check. A virtually identical amendment was offered during the appropriations bill to prohibit any FHA money from going there. It was defeated by 2-1. It was a fairly, a very large vote on this side, obviously, but a significant vote on the other side. We've debated all these issues. I hope by the end of the day we will send the FHA bill through. And let me just close by saying I welcomed what the administration did. We are moving closer. I hope by the end of today we will have sent this bill to the Senate along with the GSE bill. And I've spoken to Secretary Paulson. I've spoken to members of the Senate. If the Senate will then take up the GSE bills and the FHA bills, I know there are differences. We want a signature on both bills. We will have a genuine three-sided conference, ourselves, both parties, the Senate, both parties, the Secretary of Treasury, the Secretary of HUD, and I believe if the Senate will act well before Thanksgiving, we can have a good package in which the GSEs and FHA are made sounder and more solid and better able to serve the people. I yield back.
The gentlewoman from Illinois is recognized.
Thank you, Madam Chairman. I yield 15 seconds to the ranking member, Bacchus.
Gentleman is recognized.
Thank you, Madam Chairman. Madam Chairman, I'd like to thank the chairman of the full committee, and I want to make it perfectly clear that this was a grandson, not a son or daughter, that was born to Linda and I. So, which, you know, you said proud addition. I just didn't want a rumor back home that we'd had a child. But I also want to acknowledge what you said. There are many...
The gentleman
I
is
yield- I yield-
expired, sir.
I yield the gentleman another 30 seconds.
If there are many...
Gentleman's recognized.
There are many important reforms in this bill. In fact, from last year's bill, much of what the chairman has said, I think we've worked together, groups have worked together, and as a result of the subprime crisis, we've got an even better bill, and I acknowledge all that. So, and there are many good things about this bill, and I commend him for his knowledge of the subject and his fine work. Thank you.
The gentlewoman from California is recognized, or do you just choose to continue, Ms. Biggert?
May I inquire as to how much time we have
Yes.
left?
Ms. Waters has 13 and a half minutes, and Ms. Biggert, 21 and a half minutes.
Thank you.
Who seeks time?
I yield to the gentleman from Texas, Mr. Green, 2 minutes.
Thank you,
The
Madam
gentleman is
Chair.
recognized.
I want to thank you and the chairman of the full committee for this brilliant, well thought out piece of legislation. I absolutely support it. Done. I also would like to point out that the bill has an amendment that we introduced to deal with the mortgage brokers. This bill requires mortgage brokers and correspondent lenders to safeguard and account for a borrower's money. It is actually codified into law. It would require them to follow reasonable and lawful instructions of the borrower and to act with reasonable skill, care, and diligence in handling the money of borrowers and the business of borrowers. It allows the Secretary of HUD to deny a violator the privilege of originating loans. It's a good amendment. I beg that my colleagues would support it. Finally, I want to talk about the alternative credit amendment that was added that we introduced, which is a pilot program to establish an automated process using alternative credit such as rent, utilities, phone bills. Many persons are credit worthy, but they don't have the traditional credit necessary to purchase a home. This bill will establish an alternative system so that they too may enter the marketplace and purchase a home. After 4 years, the GAO is to give Congress a report on the bill. I support all of what is in this bill, and I beg that my colleagues do so as well. Again, I commend the chair and the ranking members for what they have done as well. And I thank the chair, and I yield back the balance of my time.
The gentlewoman from Illinois is recognized.
Thank you, Madam Chairman. I yield myself 5 minutes.
You may proceed.
Madam Chairman, I'd like to start on a positive note, but I guess must say that I'm disappointed about the bill the way it is as we're considering it today. Well, the bill has improved since its introduction. I had hoped that we could take up the same bipartisan FHA modernization bill, H.R. 5121, that passed the House last year. And since we've been talking about it, I might say it was co-sponsored by 54 Republicans and 51 Democrats and 1 independent. So it was a good bill and a bipartisan compromise that was agreed to by Chairman Waters, Chairman Frank, and then Chairman Mike Oxley. And given the overwhelming vote, and the exact number was 415 to 7 for last year's bill, I'd hoped that we could take it up and move it quickly to the floor. But instead, we have 2 bills this year. We have the bill H.R. 1752, which I introduced, which was identical to last year's bipartisan bill, and we have Chairman Waters' bill. And so I think we're today considering a new bill with new provisions that are not bipartisan, and I think it has delayed the FHA modernization and will serve fewer borrowers than last year's bill. But it's an important bill. There are some key differences between these bills. There is one that has caused the greatest concern for me and many of my colleagues, and that is the inclusion of a provision in H.R. 1852 that creates a funding placeholder and siphons off FHA funds to a brand new government trust fund. And it's an admirable, affordable housing. We all want affordable housing in all forms, whether it's Section 8, whether it's public housing, whether it's FHA modernization. But I think that taking the funds out of FHA and using them for a purpose unrelated to its core mission of the FHA would threaten the solvency of the FHA fund and its ability to pay out the insurance claims. And we are reaching a crisis there where we are going to have some credit influx into the FHA fund. So we'll hear more discussion on that during the consideration of Mr. Hensarling's amendment during this debate. So it's my hope that we can work together to address members' concerns through the amendment process so that a modernized FHA bill can help assist more low and moderate income Americans in buying and keeping their homes. I'd like to just briefly talk about and thank Chairman Waters for offering a specific provision in this manager's amendment. The chairwoman's original draft only permitted first-time home buyers to participate in new low and no down payment loan programs, but the amendment under consideration corrects that and mirrors the provision in the FHA modernization bill that allows any FHA qualified borrower to participate in the new FHA low and no down payment loan program. So clearly the FHA has a role to play in the solution to this country's rising foreclosure rate. And as I think I said on April 19th during our first committee hearing on this bill, that one of the most important things that Congress can do as we search for ways to help those that have been harmed by the subprime market is to give FHA the tools it needs to be a viable alternative for the first-time and low-income borrowers. And then I'd like to address an issue that Chairman Frank did bring up, and even though he's not on the floor, but the legislation that I have included another bipartisan agreement last year, and that was the automatic reduction of annual premiums in FHA to no more than 55 basis points for loans that remain active after 5 years. And automatic premium reductions can be a good thing. They can reduce refinancing and perhaps some defaults and foreclosures as well. In contrast, I think that the Frank Waters bill requires the refund of excess upfront premiums charged to higher risk borrowers, those with FICO scores under 560. So I'm concerned that this provision would have the unintended consequences of limiting the number of borrowers that could be served by the FHA program, because it requires initial premiums to be even higher. And I think that the refund provision would also be very difficult to implement. This is an insurance program, and when you have car insurance, you don't get a refund if you don't have an accident. You might have your rate lowered, which is like what was in the former bill. So I think that is an issue that he talked about that I wanted to clarify. And with that, I would yield back. I would reserve the balance of my time.
The gentlewoman from California is recognized.
Thank you very much. Madam Chairwoman, I yield to myself 30 seconds to make sure that my colleague on the opposite side of the aisle, Ms. Biggert, whom I've worked with so closely and enjoy working with so much, is clear on the fact that the Housing Trust Fund does not take money from FHA. And I think Mr. Frank made it very clear before he left that HUD would have to certify that it is solvent before any of that money goes into the trust fund. I think that's very important. With that, I will yield to the gentleman from Texas, Mr. Hinojosa, 2 minutes.
The gentleman is recognized.
Madam Speaker, I rise in strong support of H.R. 1852, the Expanding American Home Ownership Act of 2007, introduced by Congresswoman Maxine Waters, who has worked so hard on this legislation. I want to commend my good friend from California for introducing such an important piece of legislation and for helping me and the Congressional Rural Housing Coalition find ways to provide housing for all Americans, including those in rural America. She has found numerous ways to improve the availability, affordability, and quality of housing, and this legislation advances that cause. Madam Speaker, this legislation, H.R. 1852, will modernize and update the National Housing Act and enable the Federal Housing Administration to use risk-based pricing to more effectively reach underserved borrowers. It will also provide a safe alternative for potential home buyers with less than perfect credit, thus helping them avoid the pitfalls of certain subprime lending and hopefully reduce a large portion of predatory lending. This legislation is very important to working families. Hundreds of thousands of American families are concerned about losing their homes as their mortgage payments increase because of subprime loans with adjustable interest rates. With strong efforts to assist them, up to the 40% of families with subprime loans could qualify for more affordable fixed-rate loans so they can keep their homes. As co-chair and co-founder of the Financial and Economic Literacy Caucus, I am particularly pleased that the legislation contains, may I have 1 minute? 1 additional minute.
I yield the gentleman 30 additional seconds.
As co-chair,
Gentleman's recognized.
I am particularly pleased that the legislation contains a housing counseling provision. It is a long time coming. I want to express my sincere appreciation to Chairwoman Maxine Waters for introducing such important legislation. Madam Speaker, I ask unanimous consent at this time to submit for the record letters from the American Bankers Association and the National Association of Home Builders in support of H.R. 1852. For these reasons, I strongly urge my
The
colleagues
gentleman's
to
request
vote yes.
is covered under general leave, sir. The gentlewoman from Illinois is recognized.
Thank you, Madam Chairman. I would just like to thank the gentleman from Texas, Mr. Hinojosa, for all his hard work on our financial literacy and education caucus. I really enjoyed working with him, and the counseling really fits right into the purview of financial literacy. So, again, I thank the gentleman. With that, I would yield to my friend, the gentleman from California, Mr. Miller, for 5 minutes.
The gentleman is recognized.
Thank you, Madam Chair. I rise in strong support of this bill. I'd like to commend Chairman Barney Frank and Ranking Member Baucus and Subcommittee Chairman Maxine Waters and Judy Biggert for their hard work. This has been a long time coming. If you watch what the Federal Reserve is doing today, they're injecting short-term dollars into the marketplace trying to stabilize the marketplace. But what the marketplace in housing needs today is long-term dollars and revenues to ensure that people can own a home and get a long-term loan and pay that back. When I talk to brokers and lenders in my district, it is clear that the FHA program as currently structured has not kept pace. In the past, moderate-income homebuyers who could not qualify for conventional loans because of high loan-to-value ratios or high payment-to-income ratios could still achieve the dream of homeownership through the FHA program. Today, FHA program is no longer a useful product to homebuyers. Instead, working families are faced with a situation where they are either unable to own a home or they're forced to resort to a risky loan product that might make their ability to keep the home difficult. With all this occurring in the subprime market, FHA reform is more critical today than ever. The need for this legislation is immediate. Many times, exotic products such as interest-only loans, negative amortizations are the only option available to working families to achieve home ownership. This is because the FHA program became virtually irrelevant for many homebuyers. Not only can the bill before us today provide a viable alternative for families seeking to purchase a home, but it can also help families facing uncertainty about being able to keep their current home. The bottom line is to make the FHA program a viable mortgage option, we must ensure that the program's products are available across the country and they meet the needs of borrowers. This includes not only eliminating the geographic barriers to utilization of the program in high-cost areas, but also facilitating the purchase of entry-level homes, including condos and manufactured housing. These forms of housing are an affordable option for entry-level home buyers, and they should be included under this program if we truly want to help families climb the first rung on the ladder of home ownership. In addition to reforming what can be purchased under the program, we must also improve the competitiveness of the FHA product among the mortgage options available. In other words, we must address the problems in FHA programs that cause it not to be utilized when it is an available mortgage product for the potential home buyer. The answer is that the program's inflexibility and burdensome processes have left many in the industry hesitant or, in the case of mortgage brokers, unable to offer FHA product. The legislation before us today includes a number of reforms to make the FHA program relevant in today's marketplace. For example, today's mortgage brokers originate the majority of mortgage loans and therefore provide HUD with the most available and efficient distribution channel to bring the FHA loan products to the marketplace. While mortgage brokers originate the majority of loans, many are not able to offer FHA products because of the cost-prohibitive and time-consuming financial audit and net worth requirement. This effectively leaves subprime loan products as the only option for many borrowers who would otherwise qualify for an FHA. Now, let me say the subprime market is extremely beneficial and it needs to be relevant. But today you have many predators in that marketplace that are making loans to people that they know they cannot repay. The bill before us today includes language to replace FHA's net worth and audit requirements with a surety bond to allow more mortgage brokers to offer FHA products. This will ensure that the home buyers are given the option of an FHA product when they seek the services of a mortgage broker. I would like to say a word about the Affordable Housing Fund included in this bill. While I opposed a similar fund when it was attached to the GSE reform bill, I want my colleagues to know that I support this fund because an amendment I offered at the markup was accepted by Chairman Frank to essentially say, and these are arguments that have been made against this, that the HUD must ensure that FHA insurance premiums are, one, as low as possible, 2, that the insurance fund is solvent, and 3, that any FHA needs are met before excess dollars are sent to the housing fund. Virtually, it says that FHA has the dollars, they will use the dollars, and when it's not needed, then those dollars will be forwarded to the fund. After that, I firmly believe that the FHA fund should be dedicated to housing. We do this for the highway fund when we charge gas tax. Those taxes are dedicated to repairing our roads and highways in this country. We should do this for the FHA too. The FHA money we are talking about is money that currently is going to the Treasury. Now more than ever, Congress must pass an FHA legislation so that we can remove the impediments to the utilization of FHA and ensure that it once again helps working families across the country, that they have an opportunity to achieve and maintain home ownership. This is an important reform that will help many families avoid foreclosures. Most of the people, I would say all the organizations in the industry who are looking to help people who are in trouble today, support this bill. They also support the GSE reform bill that we put forward because it does one thing: provides long-term stability and liquidity to the marketplace. The goal of this bill is to ease the burdensome problems people are facing today. They're looking at losing their homes. We're saying let's provide long-term liquidity and help them maintain their homes. I yield back the balance of my time.
Thank you. The gentlewoman from California is recognized.
Thank you. I yield to the gentlewoman from New York, Financial Institutions and Consumer Credit Sub-Chair, Ms. Maloney.
How much time, ma'am? Madam
2
Chair?
minutes.
2 minutes. The gentlewoman is recognized.
You're calling on me? Okay. I thank the gentlewoman for her extraordinary leadership, really creative leadership, along with Barney Frank and others. And I rise in support of the bill, which will revitalize the FHA and will ultimately assist low and moderate income families seeking the American dream of home ownership and providing much needed stability and liquidity in the markets with the subprime crisis. I thank the lady for accepting an amendment that I authored that would expand affordable and available daycare by giving an incentive to build or include licensed child care facilities in FHA insured properties. This bill does many things that are very important. It builds on the President's recent announcement that FHA will work with homeowners who are having a difficult time paying their mortgage due to a reset in their interest rate. This will help with the subprime crisis by, number one, increasing the loan limits in high-cost areas of the country like New York City, where FHA has been driven from the market, forcing many borrowers to turn to high-cost financing. It will, secondly, authorize zero down and lower down payment FHA loans for home buyers who could not otherwise make these payments. It directs FHA to underwrite to borrowers with higher credit risk than FHA currently serves. And it permanently eliminates the current statutory volume cap on FHA reverse mortgage loans to permit this program to meet the growing needs of home equity-rich, cash-poor senior citizens. And very importantly, reinvesting the increased profits created into an affordable housing fund. With all the great things in this bill, I am concerned that we may be loosening the reins a bit too much by allowing mortgage brokers to bypass the current audit and net worth requirements and instead posting a surety bond to participate in FHA. I have been very concerned with the role the largely unregulated mortgage broker industry has played in the current subprime mortgage crisis. I do support this bill, and I hope we can work to ensure the safety and soundness of FHA, and we are expanding affordable and available housing. And congratulations, Chairman Waters.
The gentlewoman from Illinois is recognized.
Thank you, Madam Chairman. At this time, I would like to yield 3 minutes to the gentlelady from West Virginia, Ms. Capito, who is now going to assume the role as the ranking member of the Housing Subcommittee.
The gentlewoman is recognized.
Thank you, Madam Speaker. I would like to first thank my good friend, the gentlewoman from Illinois, for yielding to me, and for her leadership as the ranking member on the Housing Subcommittee. She's left big shoes for me to fill, but I know she's not going to be too far away on the committee, so I can lean on her for help. I also look forward to working with Chairwoman Waters on this committee. I know we'll work well together, as you all have set up a great pattern of bipartisanship on the Housing Subcommittee. So thank you very much for your leadership. The legislation we're considering today is an important step towards stabilizing a housing market that has been in a steady decline over this past year. While many of us were working in our districts over the recess period, our financial systems were experiencing a bit of a credit crunch, due in part to the problems of the subprime housing markets. Many of the problems we're facing in the housing market are due to individuals with credit challenges and inexperienced first-time home buyers utilizing very complex and creative financing tools to allow them to purchase a home which they would otherwise not be able to do. Home ownership is something that we all aspire to, and I'm proud to say my state of West Virginia has some of the highest home ownership in the country, over 70%, because with home ownership comes solid community involvement, comes better economic health, and also better socialization and education levels. The use of interest-only and adjustable rate mortgages are now causing problems, as these mortgages are now resetting at much higher rates, frequently unaffordable rates causing an increase in foreclosures. The reforms to the FHA will help provide stability in the housing market by providing greater assistance to new and riskier homebuyers. Some of the reforms I'd like to highlight are the extension of the maximum length for an FHA loan from 35 to 40 years, directing the FHA to serve high-risk home buyers while lowering upfront fees for high-risk buyers, allowing for a zero down payment for first-time home buyers, and I'm hearing today that also for those who are FHA qualified, and authorizing an increase in FHA loan limits for both rural and urban areas. The final component is especially important because in many areas the current loan limits are outpriced by many larger metropolitan areas. These expanded limits will help many buyers access stable and secure loans so they can achieve the goal of home ownership. Each of these reforms has bipartisan support, and we must continue to work together in order to provide much-needed assistance to our struggling home owners. Again, I would like to thank Chairwoman Waters and Ranking Member Biggert for their hard work on this critical legislation, and I yield back the balance of my time.
The gentlewoman from California is recognized.
I yield to the gentleman from Minnesota who's focused on predatory lending, 2 minutes. Please, Mr. Ellison.
How much time, madam?
Madam Speaker, I'd like to thank the Chairwoman Waters and Chairman Frank for bringing this bill to the floor today before the body. H.R. 1852 makes significant improvements to the current Federal Housing Administration policy at a time that is crucial to American working families and to our nation's economy. It comes before us at a time when the unstable housing market has brought disruption to our economy, world financial markets, but most importantly in our neighborhoods. By expanding the availability of FHA loans and using the new revenue to create an affordable housing trust fund, we are helping to make the dream of a home ownership not just an illusion, but a real possibility. Once again, I want to thank the sponsors of this legislation and urge support of the bill. I'd also like to point out that the mortgage foreclosure crisis in America continues to get worse. Mortgage foreclosures are now at a level previously seen only at the height of the Great Depression, and it is only predicted to get worse going into the fall and winter. In August, foreclosures nationwide were up 115% from 2006. Hopefully, this important piece of legislation will help make the American dream of home ownership not just an illusion, but a real possibility. Thank you. I yield back.
The gentlewoman from Illinois is recognized.
I have no further speakers.
Are you going to reserve your time?
I reserve my time.
The gentlewoman from California is recognized.
I recognize the gentlewoman from California, Ms. Barbara Lee, for 1.5 minutes.
The gentlewoman is recognized.
Thank you, Madam Speaker. I rise today in strong support of expanding American Home Ownership Act of 2007. I want to thank Chairman Frank and Chairwoman Waters for their leadership and their commitment to revitalize the FHA and provide critical assistance to those who have been affected by this crisis, which is unfortunately reverberating across our country and the entire world. Many hardworking Americans that may otherwise not have been able to qualify for a loan were lured into a fantasy universe of low rates and even lower payments by unscrupulous lenders. However, reality has kicked in, And those most affected are the elderly, single parents, and members of minority populations. This bill is a critical first step to help those who have been caught up in this nightmare. For instance, current FHA rules prevent the FHA from making loans beyond the local median home price. This bill will increase loan limits to make FHA relevant in those areas. This is a crucial fix which will provide assistance in high markets like mine in California, in the 9th Congressional District, in Northern California. This bill also increases funding for housing counseling, which helps to ensure that those who achieve the American dream of owning a home can keep it. With a good job and good credit, this bill will allow for instance, those who want to deal with down payment assistance to qualify for a loan by providing that down payment assistance. It addresses authorizing a 0 or lower down payment on loans for borrowers. So I want to thank Congresswoman Waters and Mr. Frank for making housing an important national priority.
Does the gentlewoman from Illinois continue to reserve?
I reserve the balance of my time.
Okay. The gentlewoman from California is recognized.
I yield to the gentleman from Maryland, Congressman Cummings, 1.5 minutes.
The gentleman is recognized.
Thank you very much. I want to thank Ms. Waters for this absolutely brilliant legislation, very comprehensive. And I also want to thank Chairman Barney Frank. Madam Speaker, later today, the Feds is expected to lower interest rates for the first time in 4 years to protect the economy in hopes of making loans less expensive for people to finance certain credit card debt and for homeowners to take out popular home equity lines of credit, which often are used to pay for education, home improvements, and medical bills. The Fed's actions today will have a positive impact on home ownership, as will our consideration of H.R. 1852. This legislation will allow FHA to carry out its function of assisting credit-worthy, low-income, and credit-risk citizens in becoming homeowners. Most importantly, the FHA will be able to steer these people away from the predatory practices of the subprime mortgage industry. Some of the most important features of 1852 include raising the program's loan limit to $417,000, providing refinancing opportunities to borrowers struggling to meet their mortgage payments, authorizing 0 and lower down payment loans for qualified borrowers, and enhancing FHA's reverse mortgage program to help seniors pay for health and other expenses by removing the loan cap to avoid program shutdowns and raising loan limits. Again, I applaud Ms. Waters, Chairman Waters, for her outstanding leadership in this area, and I urge all my colleagues to vote in favor of the bill.
The gentlewoman from Illinois is recognized.
I continue to reserve my time if there are more speakers on the other side or if Ms. Waters is ready to close.
The gentlewoman from California is recognized.
Madam Chair, I'd like to inquire that if the gentlelady has no more speakers, is she yielding back her time? But I would reserve the right to close.
Gentlelady from Illinois is recognized.
All right. Then I would recognize myself for such time as I may consume.
The gentlewoman is recognized.
Thank you, Madam Chairman. In closing, I would really like to thank the subcommittee Chairwoman Waters for her work on this bill. I'm pleased that the FHA modernization bill is moving forward, and I think that the bill that we will vote on today is much improved from the original draft and as a result of constructive input from members from both sides of the aisle. It contains many bipartisan provisions that I support, and it still contains a few provisions that I do not support. But it's my hope that the provision siphoning money away from the fund will be struck, and that true risk-based pricing will be implemented so that FHA can serve the maximum number of borrowers possible. But those arguments have been made and have been rejected by the majority. So it's my sincere hope that we can further improve the bill as it continues to move through the legislative process. As I understand it, the Senate Banking Committee is scheduled to mark up its version of FHA reform tomorrow. So unlike last year, it appears that FHA reform is gaining traction in the Senate. And I hope that we can move this bill beyond the House during this Congress, and that the Senate and the administration will work with us to reform this important program. I think American families deserve a 21st century FHA program to have a safe and secure mortgage product as an alternative to the dangerous products offered by predatory lenders. Qualified American families look to keep their homes and refinance their bad mortgages, many of which are currently in default, deserve to do so through a modernized FHA. Again, I look forward to our continued work. And I would really like to thank Chairman Waters so much. You know, as I leave the as ranking member of this subcommittee and go over to financial institutions, I do with some remorse. I really have enjoyed working with the subcommittee chairman on this committee, and then the times that we have spent. I will still be on the committee, but won't have the opportunity to sit together and make some decisions. And I really have enjoyed every minute of it, and even the trip to New Orleans and Mississippi, as well as working on these bills with her. So I thank you so much. I also thank Chairman Franks, and I think he has worked so hard on this committee. I kind of think I will miss it because it certainly has been the most active committee, I think, in Congress this year. Never did I dream that we would have at least 3 hearings a week and 2 markups and all the things that have gone on, but I think you've made great progress in the housing field, and I appreciate both of you for all that your concern and your passion for the housing and making sure that low-income families will be able to meet their American dream. And with that, I would yield back the balance of my time.
The gentlewoman from California is
Thank you. May I
recognized.
inquire as to how much time I have left for the closing?
The gentlewoman has 2 minutes remaining.
Thank you very much, Madam Chairman and members of the House. First, I'd like to tell the subcommittee chair how sad I am that we're not going to be working as closely together on this housing subcommittee committee on housing. I've truly enjoyed working with her, and even though she will remain on the committee, we perhaps won't have an opportunity to sit together and chat and not only make decisions, but just make fun of some people from time to time. Yes, I yield to the gentleman.
I would add to that. I would say I really am very proud that on our committee, and the gentlewoman is right, there are some areas of disagreement. I think we have shown how you can have disagreements, legitimate disagreements of governmental philosophy, within a framework of some agreements, and be able to deal with them so that the disagreements can be reasonably debated and don't spill over and don't interfere. And the gentlewoman is right. We have been very active, but we could not have been active in a very constructive way if it hadn't been for that spirit. And I thank her for it, and obviously we'll still be working with her, but we do want to acknowledge how helpful she was and how constructive in her role as a ranking minority member.
You're absolutely correct. And I'd also like to thank Mr. Bacchus, Mr. Miller, Mr. Bacchus, who has been so good to work with, Mr. Miller, who's an expert. We've been able to talk about things, to work out differences, and to move forward. This is a very productive overall Financial Services Committee, a very productive subcommittee on housing and community development with people working together on both sides of the aisle. We're getting things done. This may be one of the most important pieces of legislation to pass this House in this session. We will be able to help people with refinancing. We will be able to help people stay out of foreclosure. We will be able to revitalize FHA that really knows and understands how to provide insurance for moderate and low-income folks who are desperate to be homeowners. And I'm just delighted that I've had an opportunity to play a role, and I yield back the balance.
Would the gentlelady yield?
Yes.
The gentlewoman has no time to yield. I'm sorry.
I ask unanimous consent to reclaim my time.
Hearing no objection, you may
Thank you.
reclaim
I
your
just,
time.
in all, thanking, I forgot to thank the staff, which I really would like to do, the staff of the subcommittee, Cindy Chetty, Tallman Johnson, Nicole Austin, Robert Gordon, and Jim Klinger for all the work that they've done on the minority side of the aisle, and also to thank on the other side of the aisle, the Democrat staff who have been so helpful to us, Scott Olson, Gail Lester, Jonathan Harwitz, Kelly Larkin, Tom Duncan, and Hime Lazarda. And I thank all of them for all the work that they put into this bill. And also, one of our new members on this side of this, Jason Britt, one of our new members of the staff. But thank you so much. I yield back.
All time for general debate has expired. Pursuant to the rule, the amendment in the nature of a substitute printed in the bill, modified by the amendment printed in a Part A of the House Report 110-330, is adopted. The bill as amended shall be considered as an original bill for the purpose of further amendment under the 5-minute rule and shall be considered read. No further amendment to the bill as amended is in order except for those printed in Part B of the report, except for Amendment Number 2, which may be offered out of sequence. Each further amendment may be offered only in the order printed in the report by a member designated in the report, shall be considered read, shall be debatable for the time specified in the report, equally divided and controlled by the proponent and an opponent, shall not be subject to amendment, and shall not be subject to a demand for division of the question. It is now in order to consider Amendment Number 2, printed in Part B of House Report 110-330. For what purpose does the gentleman from California rise?
I rise to offer the amendment.
The clerk will designate the amendment.
Amendment Number 2, printed in Part B of House Report Number 110-330, offered by Mr. Cardoza of California.
Pursuant to House Resolution 650, the gentleman from California, Mr. Cardoza, and a member opposed, each will control 5 minutes. The chair recognizes the gentleman from California.
I'd like to recognize myself for 2 minutes.
Gentleman's recognized.
I rise in support of this amendment, Madam Speaker, and I wish to begin by thanking Chairman Frank for bringing this much-needed legislation to the floor and for all his efforts to help the reeling housing industry in my area and the country in general. As we have heard from countless media reports, we are facing a growing mortgage crisis. Sadly, I represent an area that is particularly hard hit by this crisis. The community of Stockton has acquired the distinction of having the highest foreclosure rate of any U.S. city in the country, and their 1 in 20 households are in jeopardy of foreclosure at this time. In fact, Stockton has had 8,000 foreclosures so far in 2007. This morning, the Modesto Bee reported that Central California and Central Valley homeowners were 6 times more likely to be in mortgage default the last year than the national average. In addition, home values have plunged 15 to 20% so far this year. This amendment will address this problem and help ameliorate the harsh effects of the credit crunch. First, the amendment raises the FHA loan limit to the lower of A, 125% of the local median home price, or B, 175% of the national GSE conforming loan limit. The biggest impact of this will be to make FHA loans available in low and moderately income price home markets. By raising the local loan limit up to 125% of the local median home price, FHA will be able to serve currently neglected populations and ensure loans in this vast middle market area. In addition, the amendment will have the effect of serving high-cost areas as well. By raising this artificial cap to 175% of the GSE conforming loan limit, the amendment will allow FHA to serve high-cost areas. California has some of the highest priced real estate anywhere in the country. This amendment, by expanding FHA's reach to high-priced areas, will finally bring the benefits of FHA to millions of deserving Californians. I yield myself an additional 30 seconds, Madam Speaker.
Gentleman is recognized.
In addition, there are other areas of the country where this will have a monumental impact. Massachusetts, New York, Connecticut, and other areas are all high-cost areas and will benefit tremendously from raising the loan limits. Raising loan limits and enhancing the availability of FHA to serve currently neglected populations will have the effect of generating more liquidity in the market and enhancing lender confidence. This will enable more borrowers who are facing loan resets to refinance their mortgages on more favorable terms. This amendment has strong support of the National Association of Realtors, the National Association of Home Builders, and others on the front lines of the housing industry. They know the needs of this industry, and they know that this bill will help.
Who seeks time in opposition to this amendment?
Okay.
For what purpose does the gentlewoman from Illinois rise?
I rise in opposition to this amendment.
The gentlewoman is recognized. for 5 minutes.
With that, I would yield such time to the gentleman from California, Mr. Miller.
How much time did you yield him, madam?
4 minutes.
4 minutes. The gentleman's recognized.
Well, I'm rising asking for strong support for this amendment, so it's not really in opposition to the amendment. This bill, and this amendment particularly, is to encourage the FHA programs and products and make sure they're available across this country to help working families to achieve and maintain home ownership through the FHA program. The bill we are considering here today reforms the FHA single-family mortgage insurance program so that we can reach working families it was created to serve. I don't think there's any question that the FHA program as currently structured has not kept pace. Today, FHA is no longer a useful product to prospective home buyers. The problem is that statutory limitations preclude the FHA from adopting a rapidly changing marketplace that we experience today. As the private sector mortgage markets become more efficient, the FHA program's inflexible rules and requirements left it virtually irrelevant as a financing option. Under the current limitations, FHA products are not available for home buyers in high-cost areas of the country because the maximum loan limits are so much lower than the median home prices in that area. We did something very similar to this when we did the GSE in the high-cost areas, and the only people arguing against raising the conforming loan limits in high-cost areas were those whose home median prices fell far lower than the median amount they were able to loan on. If your median home area is $200,000 and they live in $435,000, you don't care. But in California and other areas, it's quite the opposite. Now, California's drop in FHA volumes have been nothing short of stunning. In 2000, FHA insured 109,074 mortgages in California, but last year it only insured 5,137. In my district, FHA insured 7,000 mortgages in 2000 and only 80 mortgages in 2005. These figures represent a 99% drop in what FHA is able to loan in these high-cost areas. That in of itself states that there is a huge problem that this amendment is trying to cover and create the shortfall that currently exists in the program. Arguably, working families in high-cost areas of the country are just the kind of underserved populations the FHA program was originally intended to serve. If we want to ensure the FHA is relevant for all those who need it, we must reform the program so that it is available to low and moderate income families across the country, even those in high-cost areas. On August 31st, the President announced his goal to help an estimated 240,000 families avoid foreclosures by enhancing the FHA program. Under the President's plan, FHA will allow families with strong credit histories who have been making timely mortgage payments before their loan reset but are now in default to qualify for refinancing. Unfortunately, without an increase in the loan limits, this program will not help families in high-cost areas. This amendment is supported by Mr. Frank Cardoza and myself would make sure that families can refinance in the FHA products by raising the FHA single-family loan limits in each local area to the lower of 125% of the area median home price or 175% of the national GSE conforming loan limits. The amendment also gives HUD authority to raise these loans limits amount of $100,000, quote, if market conditions warrant, end quote. The NAHB, National Association of Home Builders, has written a very, very strong letter in support of what we're trying to do. Many builders are selling homes today, and the problem they have is the person buying their home cannot find financing to sell their home. And this will help those people who are looking for financing and dealing with liquidity shortages in the marketplace. The National Association of Realtors has also written a very strong letter supporting what we're trying to do today. The problem they're facing today with people in the mortgage bracket that we're trying to deal with in this amendment, this will go a long way to providing liquidity and competition in the marketplace to ensure that American home buyers and families have the best and most opportunity that can be achieved through the marketplace through this amendment. So this is a very good amendment, and I would ask for an aye vote and yield back the balance of my time.
The gentleman from California is recognized.
Thank you, Madam Speaker. I want to thank my colleague, Mr. Miller, for his kind and accurate comments, and I'd like to now yield 1 minute to my colleague from California, Ms. Waters.
The gentlewoman is recognized.
Thank you very much. I appreciate Mr. Cardozo's amendment so much because it does have an important impact in high-cost markets like our home state of California. FHA statute creates an artificial cap on the maximum home price, meaning that FHA does almost no loan business in certain high-cost markets. Now, this will put FHA back in the business of insuring loans in high-cost areas, not only in California, New York, Connecticut, Massachusetts, and other areas with a limited FHA presence. This amendment also puts FHA in a better position to help subprime borrowers and address temporary market dislocations. Even before the recent mortgage crisis developed, there was a bipartisan consensus shared by the administration that reforms H.R. 1852 would help get FHA back in the business of making loans at good terms and conditions to borrowers that turned to predatory loans in recent years. This amendment expands the extent to which this objective can be achieved. This is absolutely a great bill, a great amendment, and I support it, and I yield back the balance of my time.
The gentlewoman from Illinois.
Thank you, Madam Chairman. I recognize myself for 1 minute.
You may proceed.
I really, believe in the concept of this. I think that there are a lot of high-cost areas that will really benefit for this. I hope that this will not hurt some of the low-cost areas. In other words, that their amounts will be reduced. And some of the, I think that the administration has said something about the fact that some of the areas across the country would be hurt and would lower below the 419,000 limit. So I hope that will be addressed. And I see Mr. Frank, maybe you would like to comment on that. And I yield back. So.
The gentleman from California
I'd
is
now
recognized.
like to yield 1 minute to the chairman of the committee, Mr. Frank.
The gentleman is recognized.
I thank the gentleman, and I thank the gentleman from Illinois. She's absolutely right. If I thought this would in any way impinge on our ability to help middle-income and low-income people, I'd be opposed to it. In fact, if this works as we believe it will work, it'll be the opposite, because CBO has consistently scored. We haven't had this particular amendment scored, but prior amendments that have raised the limit at which the FHA can operate have been scored by CBO as generating a surplus, a positive number. And that is some of the money that we're going to use. As the gentlewoman knows, while there's some controversy about some things, we significantly increase in this bill the amount for counseling, because if there had been proper counseling, a lot of people wouldn't have been stuck in pre-prime. That counseling is aimed at helping people in lower brackets. This is part of the money for it. And I'd be willing, when we get to conference, to say, if in any way this would appear to be impinging on the ability to do the rest of the mission, we'd cut it off. But the way it's going to work, it will in fact generate a surplus which we intend to use to help precisely the people whom the gentlewoman refers to. And I thank the gentleman, and I appreciate his advocacy of this. He's been one of those who, from California, has been most vigorous in reminding us of the need to do it.
The gentleman from California has 1/2 minute remaining.
Thank you, Madam Speaker. In the short period of time that we have remaining, I just want to thank the chairman of the committee for his leadership, my colleagues on the Republican side for their support, particularly Mr. Miller. This is important legislation for our country. When you live in an area where the housing prices have declined precipitously by 20% in less than a year, where you see foreclosures rampant, in my district alone, there are probably over 20,000 of such foreclosures. It's having real impacts on real families in my district and across America. We need to change these regulations and bring help to these citizens in need. Thank you, Madam Speaker.
The question is on the amendment offered by the gentleman from California. Those in favor, please say aye. Aye. Those opposed, please say no. In the opinion of the chair, the ayes have it. The amendment is adopted. It is now in order to consider amendment number 1, printed in Part B of House Report 110-330. For what purpose does the gentleman from Massachusetts rise?
Madam Chair, I have an amendment at the desk.
The clerk will designate the amendment.
Amendment number 1, printed in Part B of House Report number 110-330, offered by Mr. Tierney of Massachusetts.
Pursuant to House Resolution 650, the gentleman from Massachusetts, Mr. Tierney, and a member opposed, each will control 5 minutes. The chair recognizes the gentleman from Massachusetts.
Thank you, Madam Chair. Madam Chair, this amendment seeks to assist those individuals who are eligible borrowers that have been unfairly impacted by a statutory change to HUD's upfront mortgage insurance premium refund policy. Under the HUD program, borrowers pay an upfront mortgage insurance of 1.5% of their FHA loan amount, and if they repay that loan, the borrowers may be due refunds of the prepaid insurance. However, back in 2005, when Congress passed the Consolidated Appropriations Act, it included language directing that for mortgages endorsed for insurance on or after the date of enactment, which was December 8th of 2004, borrowers would not be eligible for refunds on that prepaid insurance. I've heard from constituents in my district, and I'm sure there are constituents in other districts as well, who closed on their mortgage prior to December 8, 2004, but regrettably, they've been prevented from receiving their refund because HUD did not endorse their loan until after December 8, 2004. These constituents reportedly were not adequately informed by their lender about the potential revisions to the refund policy because the lenders themselves were not informed by HUD of the change until January 2005. I've heard from one family, for instance, who was seeking to buy a home in Gloucester, Massachusetts, and found themselves harmed by this provision. Although they seemed to do everything right in their own front, they were closing on their loan in November 2004. The family was prevented from receiving a refund that totaled almost as much as $5,000 because HUD endorsed their mortgage on December 10, 2004. And their lender never informed them of that consequence because, as I mentioned, the lender didn't learn it until January 2005. It certainly seems that it was an unintended consequence of the provisions in the Consolidated Appropriations Act of 2005. Also worth noting is that in response to a letter that was sent by Chairman Frank and me to the HUD Secretary Alfonso Jackson, it was indicated in his letter that he did not support the changes to the refund policy in that Consolidated Appropriations Act of 2005. This amendment makes a meaningful first step toward helping certain eligible borrowers, many of whom are low-income families who have played by the rules in pursuing their dreams of home ownership, and I would urge my colleagues to support it, and I yield back my time.
Who seeks time in opposition? All time having expired, the question is on the amendment offered by the gentleman from Massachusetts. Those in favor, please say aye. Those opposed, please say no. In the opinion of the chair, the ayes have it. The amendment is adopted. It is now in order to consider Amendment Number 3, printed in Part B of House Report 110-330. For what purpose does the gentleman from California rise? The clerk will designate the amendment.
Amendment Number 3, printed in Part B of House Report Number 110-330, offered by Mr. Gary G. Miller of California.
Pursuant to House Resolution 650, the gentleman from California, Mr. Gary Miller, and a member opposed each will control 5 minutes. The chair recognizes the gentleman from California.
Thank you, Madam Chairwoman. I rise to offer an amendment to H.R. 1852, the Expanding American Dream Homeownership Act of 2007. My amendment would allow qualified down payment assistance providers to participate in the FHA program if certain conditions are satisfied to ensure that the down payment assistance program is legitimate and that the gift that is provided to the homeowner and home buyer is truly a gift. One of the primary barriers for many Americans in achieving the dream of homeownership is the lack of accumulated wealth and disposable income required to come up with the down payment and closing costs needed to purchase a home. While they can afford monthly payments, some families have not been able to accumulate enough to cover down payment and closing costs. Fortunately, some charitable organizations have developed programs that provide down payments to families that would qualify for the mortgage through the FHA program, but for the lack of cash for a down payment. These down payment assistance programs have been successful in expanding homeownership opportunity for millions of families. The private sector has been working without government intervention to assist individuals and families who lack the necessary funds for down payments and other related costs become home buyers. In fact, Congress looked at the success of these programs when it created the American Dream Down Payment Assistance Act, a government program passed in 2003 to provide up to $10,000 in down payment and closing cost assistance to first-time home buyers. Similarly, H.R. 1852, the bill you are reviewing today, authorizes HUD to allow zero down payment FHA loans for home buyers who cannot otherwise make the down payment required under the FHA rule. In the past, HUD has permitted the use of charitable down payment assistance programs in conjunction with FHA-insured loans. Recently, however, HUD issued a proposal legitimate down payment assistance providers from participating in FHA programs. We are hearing that just last week, HUD sent a rule over to OMB for final approval. I'm very concerned about the impact of this proposed rule on the home ownership in our country. Rather than going too far, all that is really fair criteria by which these programs can continue to operate while also protecting the FHA insurance fund. If there are legitimate problems that have been identified by HUD, then we should absolutely fix these problems. In fact, the full House has agreed that we should strengthen the rules for down payment assistance providers rather than eliminate them completely from the FHA program. In July, the House unanimously passed an amendment I offered with the House Subcommittee Chairman Waters and Representative Al Green to the Transportation HUD Appropriations Bill, which prohibits HUD from taking any action to issue a final rule on the otherwise implement all or any part of the proposed rule. This amendment prevents HUD from finalizing or implementing the rule to end participation in the down payment assistance providers in the FHA program. Argument then was that HUD's proposal was too harsh a step, and we should work to include language in the FHA bill to fix the problems that HUD has identified with some down payment assistance providers. This is what my amendment before you today seeks to do. The amendment I offer today is a follow-up on our work during the T-HUD bill to put the brakes on the HUD rule and instead address the problem HUD has identified with certain down payment assistance providers. This amendment would put the controls in place to weed out the bad actors while allowing those who help millions become homeowners continue to do the good work they're doing. Unlike the HUD rule, my amendment would preserve the down payment assistance program participation in FHA while ensuring they are legitimate and helpful to the home buyers. As you know, H.R. 1852 already includes language to end the practice of inflated appraisals, which was a key argument HUD used against the down payment assistance programs. My amendment builds on this provision and says that down payment assistance providers may participate in FHA so long as the down payment they are offering is truly a gift. In other words, that it reduces the amount owed on the home. My amendment also imposes a net worth requirement on such providers to alleviate the quality and quantity involved within the activity. This provision specifically responds to HUD's complaints regarding the plethora of small fly-by-night operators with open end that open end and close down on a regular basis to evade regulatory scrutiny. Many of these groups are starting business one day, getting involved in things they should not, and closing down immediately. These three improvements to the situation, number one, prohibit inflated appraisals, two, ensuring DPA providers offer an actual gift, and three, imposing a net worth requirement will weed out the bad actors while not prohibiting all down payment assistance providers from participating in FHA, as the HUD proposal would have done. With limited resources at the federal level, Congress viewed the American Dream Down Payment Assistance Act as a complement rather than a replacement to the tremendous work down payment assistance providers were already doing to help build communities. There simply are not enough resources at the federal level to do this alone. To address HUD's concerns, we should implement the same underwriting criteria that will be used on the new zero down payment program within FHA and what HUD already uses on the American Dream Down Payment Act. If we have come up with a reasonable system to underwrite to give federal dollars to assist a family in buying a home, then we can certainly use the same criteria to allow the private sector to put forth people and monies in these programs to allow people to own their homes. If FHA can offer a zero down payment loan under a given underwriting criteria as proposed by this bill, then the private sector down payment assistance program should also certainly be able to be subjected to the same criteria. To eliminate the possibility for 1 million families to own a home through down payment assistance providers, but allow them to use the federal government for a down payment grant seems contradictory. If it works for the federal program, then it should work for the private sector alternative as well. My amendment addresses the problems within certain down payment assistance providers that HUD has identified, but rather than eliminating all providers, as the HUD rule attempts to do, it puts the protections in place to ensure that home buyers are getting a legitimate helping hand from a charitable institution and entity. And I ask for an aye vote on this bill and reserve the balance of my time.
Who seeks time?
Madam Chair?
For what purpose does the gentleman from Massachusetts rise?
To seek the time to discuss this with a certain ambiguity as to my position.
Is the gentleman opposed to the resolution?
Well, two aspects of it, yes, Madam Chair. And I will yield to the gentlewoman from California such time as she may consume.
The gentlewoman is recognized.
Thank you very much, Madam Chairwoman. I hope that our chairman didn't confuse you with that convoluted definition of what the time is that we're claiming. I am in strong support of this amendment. As a matter of fact, I'd like to take this moment to commend and thank my colleague, Mr. Miller, for the work that he has done in helping other members to understand what this is all about. I can recall when we had the hearing and everybody said, well, this is such a wonderful idea. As a matter of fact, all of us voted for the American Dream Down Payment Act on both sides of the aisle. We can't understand why there would be any questions, any problems about the way that there is assistance being given to would-be homeowners by organizations such as the ones who were presented to us on that day of the hearing. And so because of his expertise and his understanding and his appreciation, he has helped us all to come together, and it has support on both sides of the aisle. As was mentioned, the amendment would allow qualified down payment assistance providers to participate in FHA program if certain conditions are satisfied, i.e. no obligation for mortgagor to repay and net worth requirement. The Secretary shall consider as cash or its equivalent any amounts gifted by a member, by a family member, or the mortgagor, employer, or labor union, or a qualified home ownership assistance entity, but only if there is no obligation on the part of the mortgagor to repay the gift. I rise in support of this amendment. It is a major step in the direction of capturing the benefits of down payment assistance programs to over 1 million households since 1999, many of them FHA-insured borrowers, while safeguarding against bad actors in the field. The minimum capitalization requirement will protect borrowers from fly-by-night operations, while the explicit prohibition against requiring repayment of such assistance by the borrower will ensure that the benefit is indeed a gift. Equally important, the additional measures to ensure the legitimacy of appraisals in FHA-insured transactions contained in H.R. 1852 and the manager's amendment to the bill will help safeguard the entire progress. Inflated appraisals undercut the legitimacy of seller finance down payment assistance. Down payment assistance that is repaid from a seller's proceeds that derive from a borrower's ability to get a loan based on an inflated appraisal is no gift at all to the borrower. H.R. 1852 cracks down on such schemes while preserving the field for legitimate down payment assistance programs. Accordingly, I urge my colleagues to support this amendment.
Madam Chair.
Mr.
How much time?
Recognized for what purpose, sir?
How much time do I have remaining?
Okay. Accepted. The gentleman from California.
Yeah, reclaimatory. I want to thank Maxine Waters for her kind comments. I remember when we were debating the American Dream Down Payment Assistance Act, and we used the private sector down payment assistance program as the tool and the argument to expand upon and have government also get involved. These private sector groups have put over 1 million people in homes that could not otherwise be in homes. This continues a program that's worked very well and eliminates the bad actors that HUD's talking about. And I think if this is implemented, this bill will be a very strong bill, and I ask for a aye vote and yield back the balance of my time.
The gentleman from Massachusetts is recognized.
Madam Chair, I claim the time in opposition, but having listened to my two very persuasive colleagues, I have been converted, and I now support this amendment, and I yield back the balance of my time.
The question is on the amendment offered by the gentleman from California. Those in favor, please. Those opposed, please say nay. The opinion of the chair, the ayes have it. The amendment is adopted. It is now in order to consider amendment number 4, printed in Part B of House Report 110-330. For what purpose does the gentleman from New York rise?
Madam Speaker, I have an amendment at the desk.
The clerk will designate the amendment.
Amendment number 4, printed in Part B of House Report number 110-330, offered by Mr. Bishop of New York.
Pursuant to House Resolution 650, the gentleman from New York, Mr. Bishop, and a member opposed, each will control 5 minutes. The chair recognizes the gentleman from New York.
Thank you, Madam Speaker, and let me start by thanking both Chairman Frank and Chairwoman Waters and their staffs for working with us on this amendment. Very simply, my amendment would make it easier for those who own fixed foundation homes on leased land to receive a reverse mortgage. Current law allows seniors who own fixed foundation homes on leased land to receive a reverse mortgage only if the lease is for a term of not less than 99 years or if the lease is for a period of not less than 10 years beyond the maturity of the mortgage. While this language covers some seniors, many elderly Americans who own a permanent foundation home in a senior community where the land is leased are not covered by either of these two categories of leases. My amendment would remove the provision in the bill that allows for a reverse mortgage if the lease term is for 10 years beyond the majority of the mortgage and replace it with language that both clarifies and expands eligibility. Specifically, my amendment would broaden eligibility to seniors who have a lease term that ends no earlier than a minimum number of years beyond their actuarial life expectancy. This amendment is a common-sense solution to a problem that affects many seniors both in my district and across the country, and I urge its adoption. I reserve the balance of my time.
Gentleman reserves his time. Who seeks time in opposition?
Madam Chair.
For what purpose does the gentleman from Massachusetts rise?
To seek the time in opposition.
The gentleman is recognized for 5 minutes.
Well, Madam Chair, I did want to ask a question of the gentleman from New York. I have a concern about his amendment only because it does not seem to go far enough. One of the things we have tried very hard to do in our committee is to end what has been a kind of discrimination against manufactured housing, because if we are going to get to more people being able to own homes without getting into a subprime type of situation where people are induced to borrow more than they should, manufactured housing should be part of it. Now, the gentleman's amendment is properly, from his standpoint, addressed to a situation in his own district where fixed foundation housing is involved. But my question to him would be, and I realize it's under the rule not possible to change the amendment now, but I would have this question: if his amendment would be adopted, if, as the process went forward, some of us were able to work to expand this so that it wasn't limited to fixed foundation, would the gentleman from New York have any objection to that? And I'll yield to him.
I would have no objection. In fact, I would welcome it.
Well, Madam Chair, in the face of that degree of reasonableness, I withdraw my opposition, and I yield back the balance of my time.
The question is on the amendment offered by the gentleman from New York. Those in favor, please say aye. Those opposed, please say no. In the opinion of the chair, the ayes have it. The amendment is adopted. It is now in order to consider amendment number 5, printed in Part B of the House report. For what purpose does the gentleman from Texas rise?
Madam Chair, I have an amendment at the desk.
The clerk will designate the amendment.
Amendment number 5, printed in Part B of House Report number 110-330, offered by Mr. Henserling of Texas.
The gentleman is recognized. Pursuant to, let me take my cheat sheet here, I made a mistake. Pursuant to the House Resolution 650, the gentleman from Texas, Mr. Henserling, and a member opposed, each will control 5 minutes. The chair recognizes the gentleman from Texas.
Thank you, Madam Chair, and I yield myself as much time as I may consume. Recently, the Democrat majority in this institution sought to create yet another new government housing program, the Affordable Housing Fund. This is on top of the roughly 80 other programs that HUD administers for housing and urban development. So, Madam Chair, we're being asked today in the underlying bill to fund a new program without terminating any of the other 80-some-odd programs that are presently on the books, although many have already achieved their mission, many are ineffective, many are duplicative, and many are quite costly. Now, the so-called Affordable Housing Fund, as designed, will grant monies to states for a variety of purposes. And I know that the purposes are noble, but many of us believe that, unfortunately, this could become a de facto housing slush fund. I furthermore note, as monies are handed to the states, almost every state in our union is presently running a surplus, yet we regrettably know the federal government continues to run a deficit. So how much sense does this make? For those who tell us that the federal housing function is underfunded, I might note that according to OMB, in a little over 10 years, we have gone from $15.4 billion to $30 billion, roughly double. That is a rate higher. The rate is higher than the increase in veteran spending, education spending, energy spending, transportation spending, international affairs, and even Social Security over the same period. And although the House has passed this ill-conceived program, there has been no Senate action. The President has signed no bill. So we're being asked, Madam Chair, to fund a program that doesn't even exist when hardworking Americans can't even fund the roughly 10,000 federal programs that are already on the books. Now, my amendment is a simple one. It would remove this funding mechanism in this bill for the so-called Affordable Housing Fund. The funding mechanism shouldn't be in this bill. It has nothing to do with fundamentally reforming FHA. And the bill siphons money from the FHA through what I believe, and many of us believe, to be a backdoor tax on the FHA premiums paid by 4.8 million families that are using FHA insurance. It does this by diverting part of the increase from a negative credit subsidy. Now, to try to speak English here, it appears that people are overpaying their premiums. And if so, maybe that money ought to go back to the people who paid the premiums in the first place. Now, I know the creation of the fund has been a long-time goal for Chairman Frank. I appreciate his sincerity. I appreciate the nobleness of the nobility of his purpose, his ideological consistency. But the fact remains that this is a backdoor tax on low and moderate income Americans who use FHA. This funding provision is unnecessary, it's unwise, it's unsound. The money ought to go back to the people who paid it, and if that is not the will of the House, it should at least be used for those who paid the premiums in the first place, and I reserve the balance of my time.
Who seek time in opposition?
Madam Chair,
For what purpose does the gentleman from Massachusetts rise?
To sincerely seek time in opposition.
The gentleman is recognized for 5 minutes.
Thank you, Madam Chair. We have been debating this. It's a legitimate issue. We debated it when the gentleman from Georgia offered a version of it in the appropriations bill. We debated it previously. We debated a similar argument when we had the GSE bill. The gentleman says, well, there are 80 HUD programs, and HUD money has gone up. The major reason HUD funding has gone up, the single biggest one, has been in the Section 8 rental program. And there's a problem with Section 8. Section 8 adds equity, but the current Section 8 program provides rental assistance for 1 year at a time. No one can build affordable housing based on an annual grant. So what Section 8 does, well, it does provide some equity, and I've been supportive of it. It increases the demand for housing without increasing the supply. So in the current formation of federal policies, the federal government puts upward pressure on rentals in the moderate and low-income areas because we give people billions of dollars to rent apartments in a way that does not lead to any construction. This tries to make it a more balanced program. This and the GSE bill take money to begin the process of constructing affordable housing, which in the end could save us money because it will then say that the rental levels, which Section 8 is driving up, will no longer be driven up. Now, the gentleman says that it's going to be a tax on the FHA. In fact, I hope the gentleman, given his concern about a tax on the people who get mortgage insurance from the FHA, will vote against the amendment to be offered by the gentleman from Illinois. Because in this bill, unlike the gentlewoman's amendment, we have very tough restrictions on HUD's ability to raise the FHA fund unless it's necessary for solvency. We had on a bipartisan basis last year, we wrote to them and we did it in the appropriations bill because HUD was being told by OMB, not HUD. HUD made it very clear. This was an OMB directive. Raise the FHA fees because FHA isn't contributing enough to the budget. We put into our bill's restrictions. We have a restriction in our bill on the amount that can be charged for home equity mortgages by the originators. That's not in the gentleman from Illinois' amendment. We put caps on the FHA, so exactly the opposite is the case. And as far as this is concerned, the bill specifically says that no money can go to the Housing Trust Fund until the HUD Secretary has certified that the fund will be totally solvent and this will not endanger it. The money that would go to affordable housing does not come from raising anybody's fee. It comes from an increase in volume. We cap the fees. I want to emphasize this. In the bill that we have, as opposed to the gentleman from Illinois substitute, there were two separate restrictions on FHA's ability to raise fees that she doesn't have. What we do is the law now says FHA can only do 65,000 home equity reverse mortgages a year. We say no, there's no reason for that limit. We say do as many as the market will bear with a restriction on what can be charged. And that's what generates the money. It is an increase in volume at a lower price to the consumer that generates the money. And if that increased volume at a lower price to the consumer results in there being a surplus that we can spend to build rental housing, as long as HUD certifies that that would not in any way require any increase in the FHA, we say go ahead. As to affordable housing, there is a severe crisis in rental housing in this country. And you have some of the people pushed into subprime situations because there wasn't enough rental housing. We think the Affordable Housing Trust Fund helps deal with that, and I reserve the balance of my time.
The gentleman from Texas is recognized.
Madam Chair, may I inquire how much time I have remaining?
The gentleman has 2 minutes remaining.
Madam Chair, I'd like to yield a minute and a half to the gentleman from California, Mr. Royce.
The gentleman is recognized.
Thank you, Madam Chair. I rise today in support of this amendment, and I rise in opposition to the financing of an affordable housing fund. I don't believe that this fund should be included in legislation to update and improve the Federal Housing Administration. And I hope my colleagues will join me in opposing the underlying bill if this provision is included in the legislation. In 2005, I offered an amendment in the Financial Services Committee to strike the creation of an affordable housing fund. Now, part of this is philosophical, but ideas have consequences, and bad ideas have bad consequences in the long run. And as I said 2 years ago, this fund is straight out of Central Planning 101. It should not be supported by this body. I think by now we should be able to agree that government housing grants do little to increase home ownership levels in this country. If these funds must be derived, they should be geared towards ensuring the FHA remains solvent rather than supporting an experiment in socialism here. And furthermore, this fund could not be proposed at a worse time. As we see the current spike in foreclosures in the subprime mortgage market, many of which are backed by the Federal Housing Administration. Home ownership rates improve when real interest rates are low and when consumer incomes are rising, are going up. And I believe free market policies are the most effective way to generate those results. Creeping towards socialism will not. This fund will waste resources and provide false hope for those who wish to increase home ownership. And I yield back the balance of my time.
The gentleman from Massachusetts is recognized.
How much time do I have remaining, Madam Chair?
The gentleman has 1.5 minutes remaining.
I will yield myself 30 seconds to say that I appreciate the candor of the gentleman from California. He's against federal programs that help build affordable housing. I understand that. By the way, this is not, of course, the old forms of public housing. This is going to be profit cooperation. But I would say to my friends on the other side, I don't think you can argue both that we already have enough programs to do this and that we shouldn't have any at all. In fact, we do not now have programs that help build family affordable housing. We think that in cooperation with the private sector, and the gentleman mentions the market, every private market entity, the realtors, the home builders who are involved in construction in the private market support the creation of the housing fund.
The gentleman from Texas is recognized.
Thank you, Madam Chair. Either there is a surplus or there is not a surplus. It's really that simple. And so now the question is, if there's a surplus, what do you do with it? We believe that that surplus ought to go back to the people who paid for it in the first place. And if it's not going to go back to them, it ought to serve them, and it should ensure the solvency of the of this program. Since we know Uncle Sam's track record on just about every other federal insurance program is terrible. This should ensure the solvency of the program. We do not need a funding mechanism for another housing program that does not exist on top of the 90, many of which are not working. And I yield back.
The gentleman from Massachusetts is recognized.
Madam Chair, I congratulate the gentleman on his dexterity to be able to go 180 degrees opposite on his amendment, on his argument in mid-amendment form. He started out saying this surplus, we can't do this because it'll jeopardize the FHA. We point out that in the bill that couldn't happen. this bill says this money cannot be used if it would in any way jeopardize an FHA situation. He said, well, okay, let's take the surplus and put it into the regular budget. That's the debate. Do we take surplus and put it into the budget to detract from other spending? I don't think, I guess the question is this. If you take out an FHA mortgage and you get mortgage insurance, and this administration, if our bill doesn't pass, will raise that fee to make more money, should that go to the war in Iraq and for contractors in Iraq who are wasting money, or should it go to build affordable housing in our cities? Because that's where the money's going. The money isn't going to reduce deficit. It's going to waste money elsewhere. What we say is this. We should be building affordable housing, and members have said, well, don't be giving money to the states. No, I think that's a very good way to go. I think the states and the localities are best able to respond. I hope the amendment is defeated.
The question is on the amendment offered by the gentleman from Texas. Those in favor, please say aye. Those opposed, please say no. In the opinion of the chair, the noes have it. The amendment is not adopted. Yes?
Request recorded vote.
A recorded vote pursuant to Clause 6 of Rule 18. Further proceedings on the amendment offered by the gentleman from Texas will be postponed. It is now in order to consider amendment number 6, printed in Part B of the House Report 110-330. For what purpose does the gentleman from Ohio rise?
Madam Speaker, I have an amendment to desk.
The clerk will designate the amendment.
Amendment number 6, printed in Part B of House Report number 110-330, offered by Mr. T. Berry of Ohio.
Pursuant to House Resolution 650, the gentleman from Ohio, Mr. T. Berry, and a member opposed each will control 5 minutes. The chair recognizes the gentleman from Ohio.
Thank you, Madam Chair. I'd like to thank Chairman Frank and Chairwoman Waters for their leadership on these issues. For the last 6 years, I had an opportunity to work with both in the Financial Services Committee and the Housing Subcommittee. Very important issues. Unfortunately, no longer on the committee, but the issues are still very important to me. And this amendment today really is all about empowering home buyers. It would require the Secretary of Housing, Urban and Development to ensure high-risk borrowers and borrowers who are applying for zero down payment loans to receive housing counseling. Under the current bill, the language really allows the Secretary to provide counseling. This requires it. Madam Chair, as a former realtor, I've seen firsthand the benefits, the joys, the importance of home ownership in America. However, given the current environment in our country, we need to make sure that there are safeguards put in place to protect homeowners, to ensure fiscal responsible home ownership and guard against further default, bankruptcy, and loss of home. Buying a house today is arguably the most important and biggest investment in a person's life. Counseling, I have found, plays a very important role in empowering consumers, leveling the playing field, making sure they have all the right information to go into owning their own home. In the past year, Ohio, California, Florida, Michigan, and Georgia have comprised over half of our nation's foreclosed homes. Recently, Ohio, under the leadership of Governor Strickland, established the Ohio Foreclosure Prevention Task Force, which comprised of various advocates and people in the housing community throughout the state. In their report, they listed 7 recommendations. One of those recommendations, Madam Speaker, was to focus on expanding housing counseling services and making it available to everyone. This amendment today only deals with really 2 classes of borrowers. Again, high-risk borrowers and those who are applying for zero down loans under this legislation. I believe it is very, very important, critically important, Madam Speaker, to make sure that these borrowers understand the importance of homeownership, the responsibilities of homeownership, and Madam Speaker, it's important because if we're going to take a bite out of this problem, and a bite is all this does today with this amendment, because it only deals with those 2 types of borrowers, we need to make sure that every single borrower who's applying for a home under these 2 circumstances gets all the education that they need and deserve. So I urge the adoption of this amendment. This is about empowering consumers, and I hope that the House will support the amendment.
Who seeks time in opposition?
I reserve the balance.
Who seeks time in opposition?
I seek time in opposition.
The gentlewoman from Illinois is recognized.
Thank you, Madam Chairman. I just have some concerns about what we would call unintended consequences. I'm a big supporter of financial literacy. I chair the caucus, and it's so important that home buyers know what they're getting into. And I think that counseling is very important. And I think that if we have an educated home buyer, we might not see so many of these foreclosures or near foreclosures or bankruptcy with the counseling. My concern is that it's the mandatory counseling for FHA, and only because of something that's happened in Illinois and that happened in Chicago when this mandatory counseling was put in for FHA mortgages. And what happened was that the lenders withdrew from the area. It was put in first by a zip code in the city of Chicago and then put in for all of Cook County. And the lenders withdrew from the area so that there were no mortgages or very few available for those in that area, because they weren't able to get the counseling that was needed at a time to get the mortgages. It takes time for counseling, and I know that you put in, and I think that this would help, is that people could get counseling on the internet. I think it's a very important thing. I just worry about when it's mandatory that we are going to have less availability of FHA involvement when that is when it's mandatory rather than discretionary, as in the bill. So I would I think that it makes FHA less attractive if you're a prospective home buyer and one lender, a non-FHA, offers to put you into a mortgage that day, while FHA loan requires you to go through a counseling course. Which would you pick? People will leave FHA, and we don't want that to happen. So I know that it's so important that we have the counseling and that we get the people into this type of loan. This was the whole thing, was to do this so that the FHA, which I think is much more is much better than the more exotic subprime loans, and this is the whole focus of this bill. So I would hope that that we can promote it. Yes, I yield to the chairman.
I would say to my friend from Ohio, and we've worked together on a lot of things, but I share some of the concerns of the gentleman from Illinois, and I would hope that the gentleman would understand if this becomes part of the bill. We haven't had a chance to with the FHA, and we'd like their advice. And we could wind up strengthening the urging, but allow for some exceptions. And I would hope that if we went forward, the gentleman could work with us in doing that.
Will the gentleman yield?
Gentlewoman's time.
I yield to the gentleman.
Will the gentlelady yield? Yes, Mr. Chairman. Obviously, I think that we can take a look at the best of what's happening in Ohio right now, and we're doing some pretty innovative things. I'm sure in Massachusetts and California there's some innovation going on as well. The intent at the end of the day is to help the borrower and level the playing field. So yes, I'd be happy to work with you.
The gentleman would yield further. This is one, there are some differences that we have of an ideological sort. There are a lot of general areas of agreement. Mr. Montgomery, the head of the FHA, has been, I think, a very responsible and thoughtful administrator of that program. We all have a common interest in this, so I would look forward to having him in on this conversation with us, and I think we can move in that direction with some of the flexibility the gentlewoman asked for.
With that, I would withdraw my objection and yield back.
Okay. Mr. T. Berry?
Thank you, Madam Chair. Just yielding myself the balance of my time. I thank the chairman. I thank the gentlelady from Illinois. Just a point of clarification, some of the things that are happening now in Ohio is you have online testing or counseling that's taking place for people that don't have access maybe in person to a counselor. So there's really a room to grow here, Mr. Chairman, Mr. Chairman and Ms. Biggert. I really believe that we have an opportunity at the end of the day to really empower consumers, and I'd be willing to work with both of you. I urge adoption of this amendment today and urge passage of the bill.
The question is on the amendment offered by the gentleman from Ohio. Those in favor, please say aye. Those in favor, please say aye. Okay. Those opposed, please say no. In the opinion of the chair, the ayes have it. The amendment is adopted. It is now in order to consider amendment number 7, printed in Part B of House Report 110-330. For what purpose does the gentlewoman from Illinois rise?
Madam Chairman, I have an amendment that's in order under the rule.
The clerk will designate the amendment.
Amendment number 7, printed in Part B of House Report number 110-330, offered by Mrs. Biggert of Illinois.
Pursuant to House Resolution 650, the gentlewoman from Illinois, Mrs. Biggert, and a member opposed each will control 10 minutes. The chair recognizes the gentlewoman from Illinois.
Thank you, Madam Chairman. I recognize myself for such time as I may consume. My amendment strikes the bill in its entirety and inserts language that is identical to last year's bipartisan FHA modernization bill, H.R. 5121. Last year, the bill had 54 Republicans and 51 Democrats and 1 independent co-sponsor. Last year, the bill was the bipartisan compromise that was agreed to by Chairman Waters and Chairman Frank and then Chairman Mike Oxley. And last year's bill passed the House by a vote of 415 to 7 on July 25, 2006. There are differences in the bills, and this amendment, last year's bipartisan bill, I'd like to highlight a couple of important differences. The Frank Waters bill authorizes the FHA to implement risk-based pricing, but leaves in place the current, I think, outdated premium caps. My concern is that these limits on the premium caps will prevent FHA from serving riskier borrowers who could be prudently served by charging a slightly higher premium. With the flexibility to charge slightly higher premiums, FHA would be able to serve borrowers with lower FICO scores who are currently being served only by the subprime market at very high interest rates. Just like last year's bipartisan House bill, passed bill, my amendment modernizes and updates premium caps, enabling FHA to reach down and serve riskier borrowers, but in a prudent manner. And I think this is where growth comes in, because there will be more loans that FHA will be able to make. And second, the Frank Waters bill requires the refund of excess upfront premiums charged to higher risk borrowers, those with FICO scores below 560. I'm concerned that this new provision may trigger higher initial premiums and unintentionally limit the number of borrowers that could be served by FHA. A refund provision also would be difficult to implement. Perhaps most importantly, refunds like this undercut the very concept of insurance. It's the logical equivalent of a healthy person requesting 100% refund of his or her health insurance premium, or a driver who doesn't get into an accident demanding all of his car insurance back. Just like last year's House-passed bill, my amendment includes another bipartisan agreement, the automatic reduction of annual premiums to no more than 55 base points for loans and remains active after 5 years. Automatic premium reductions can be a good thing. They can reduce refinancings and perhaps some defaults and foreclosures as well. And frankly, finally, the most significant difference between the bill that I've introduced and the Frank Waters FHA reform proposal, which has been of great concern to me and many of my colleagues, and that's the inclusion of a provision that creates a funding placeholder, and you've heard this talked about so much today, that siphons off the FHA funds to create a brand new government trust fund. While the other provisions that I've mentioned are ones that represent significant differences between our introduced bills, using FHA program funds to create a housing trust fund is, to me, is the most where we have the most difference, and I believe it is not an appropriate use of FHA funds. Taking funds out of FHA and using them for a purpose unrelated to its core mission would threaten the solvency of the FHA fund and its ability to pay out the insurance claims. We don't want to have to come back here and do a bailout because FHA funds were diverted for other projects. There is general agreement on the need for FHA modernization legislation. By modernizing FHA with my amendment, we can expand FHA and give a viable alternative to more low-income borrowers who may otherwise lose their home or be forced into the higher-cost subprime loans or even predatory products. It is true that FHA cannot help all homeowners that are in the red, but it may help a good portion of them. So I would urge my colleagues to support my amendment. Last year's bipartisan bill, the House passed bill that many of my colleagues supported last year. And with that, I would reserve the balance of my time.
Position for what purpose does the gentleman from Massachusetts
To
rise?
oppose the amendment, I yield myself 3 minutes. First,
Gentleman is recognized.
the gentlewoman incredibly says this will jeopardize the solvency of the fund if we put money into affordable housing. I thought reading was one of the basic things we did around here. In the bill, it says nothing can go to the Affordable Housing Fund if it would jeopardize solvency. Simply denying plain facts is not an appropriate way to debate. In much of her argument, though, she talks about another piece that I guess represents the difference between us. We say that if you are someone with a weaker credit, a lower FICO score, the great god FICO, that's to govern the lives of lower-income people, if you get your mortgage insured and you work hard and make all your payments, you should still be charged more than the gentleman from Illinois or I would be charged for a mortgage, because that's the insurance principle. It's an appropriate principle for a private insurance company, for the federal government to say to hardworking people who are making their payments that they will be held accountable for the fact that other people didn't make their payments, and I won't be, and the gentleman from Illinois wouldn't be. That's not appropriate. So this principle of, yes, they say if you're healthy, you shouldn't get your money back. If you work hard and make your mortgage payments, why should you be charged more because somebody else like you defaulted? Let's all share that burden. And the gentleman said, well, it'll make it hard to give lower-income people loans. Madam Chair, those are crocodile tears. You're going to help these lower-income people by making them pay more for their mortgage than we would pay. I would also note, by the way, I wasn't in charge of the drafting, but we did adopt several amendments today. The gentlewoman's amendment would, of course, wipe all of them out because it would go back to last year's bill. Now, I understand there is regret on the part of many of my colleagues at the results of last November's election, and it is appropriate to try to undo last November's election. But the appropriate time to do that is in next November's election. It's not by taking bills that passed a year ago with a differently constructed House and say, let's not make any changes. We've made changes to accommodate refinancing for people caught in the subprime crisis. That's in this bill, bipartisan. It's not in the gentlewoman's substitute. Taking a year-old bill with none of the improvements we've made, it goes beyond the philosophy. Now, I understand that members over there don't want to do an affordable housing fund. That was a gentleman from Texas's amendment. I oppose it. That one made some sense in terms of ideological division. But to say, let's ignore everything that's happened in the last year, let's ignore amendments that were just adopted here today. Several amendments by both members of both parties, gentleman from California, Mr. Miller, gentleman from Ohio, Mr. Tebey, gentleman from Massachusetts, Mr. Tierney, gentleman from New York, Mr. Bishop. We adopted their amendments. Gentleman wants to wipe them out. That's not an appropriate way to legislate. I hope that the amendment is defeated, that we do not say in particular that if you are someone in a lower income category and you make your mortgage payments, the federal government will charge you more. I reserve the balance of my time.
The gentlewoman from Illinois is recognized.
Thank you, Madam Chairman. Well, we could have passed this bill 9 months ago, and then we would have added on to it. Unfortunately, this is my opportunity to do it, and this is the bill that I've had. So I bring it up now. I think, that there's, as I said before, there's good things that have come out in the discussion today. There's some good things that have been added on to the bill that you have brought forward. But I still have some the reason for bringing this up is I have some real concerns about some of the things that are in there, and this is my opportunity. I don't think that we are penalizing low-income people that much. I know that in the discussion that we had in committee, when this came up about no down payment, and there are people that can't afford a mortgage with no down payment and can meet the monthly payments, but that there was no risk with those people, no premium for FHA to insure that kind of mortgage, and that isn't fair for other people that are based on their credit scores, are having to pay a premium, and I would just disagree. If you're able to always meet those, then you should be able to. Then the risk should be depending on what you do, not what somebody else does either. I would agree with that, and I would reserve the balance of my time.
The gentleman from Massachusetts is recognized.
I think the gentlewoman confused a couple of issues. When I talked about not charging someone more because she has a lower credit score, and it's often a she that's in that category, it's not the no down payment category. What the bill does that the gentlewoman has is to say that if you are in someone with a lower credit score and you get a loan with a down payment, you get charged more even if you make your payments. By the way, the bill that she would replace with last year's bill would also knock out several protections we have in this bill against FHA fees being raised. The FHA doesn't want to raise fees, but OMB has ordered FHA to try to raise fees. Congress has had to intervene. But there are, in our version, unlike the version the gentlewoman is offering, protections against fee increases. We have an amendment that was advocated by the gentleman from Florida, Ms. Brown-Waite, and the gentleman from Georgia, Mr. Marshall, to limit the amount that can be charged to older people taking out reverse equity mortgages. That's in the bill that the gentlewoman wants to displace, and she would displace it with a bill that has no such protection for older people. I reserve the balance of my time.
Gentlewoman from Illinois is recognized.
Thank you. Just because someone is low income does not mean that they have poor credit. So I think that is not where they're going to have to pay higher premiums necessarily. But it is inevitable in an insurance fund that lower risk borrowers will subsidize higher risk borrowers, and refunds of the nature that's in that bill, in your bill, would undercut the concept of insurance. And as I said before, the equivalent of a healthy person requiring a % refund of his or her insurance premium, or a driver that does not get into an accident requiring their insurance back. And with that, I would reserve the balance of my time.
The gentleman from Massachusetts has 6 minutes remaining. The gentlewoman from Illinois has 3 minutes remaining. Who seeks time?
I do.
Gentleman from Massachusetts.
I yield myself 3 minutes. The gentlewoman has quite honestly joined this one issue. She says it's the principle of insurance, and if you're healthy, you should pay more for insurance than you should pay less for insurance than if you're sick. What goes on in an insurance situation is there. By the way, that is not the principle we follow in the federal government, and that's the point the gentleman misses. Yes, if you go to a private company, they will do that, but you don't pay more in a Medicare premium if you are sick than if you are healthy. That's what the gentlewoman is apparently advocating, that senior citizens who are sick should pay more premiums than senior citizens who are healthy. The question is whether a principle that's necessary in a private insurance scheme is appropriate for the federal government. And she says, just because you're low income doesn't mean you have poor credit. True, not in every case, but she knows there's a correlation, that the weaker the credit, the likelier people are to have low income. And she again is saying explicitly, she believes, she doesn't deny it, she defends it, it's the principle of insurance. You are a working woman making in the 40s. You get FHA insurance. You make all your payments. You've got weaker credit than somebody who served in Congress makes $180,000 a year. You have to pay more, according to the gentlewoman, than I would pay, even if you have made all your payments. And what we're saying is, at the outset, it may be that you want to charge more. Yes, we'll give the FHA the ability to do that up front. But you can earn your way out of that. if you have weaker credit, but you work hard, you are diligent, and you make your payments, why should the federal government charge you more than someone far wealthier than you? And the gentlewoman is wrong to think that that's the precedent, because in the health insurance field, in the federal government field, if you're under Medicare, you don't pay more in Medicare premium if you are sick than if you are healthy. And that's what we are saying, that you should not charge people more. I would also point out again that we have in this bill, she said we don't want to raise fees to people. Our bill limits what the FHA can be forced to charge by OMB. We have 3 separate provisions in there. I would point out again to the gentlewoman, we adopted a provision. There were negotiations between the AARP and the originators of the home equity mortgages, the services. And we have in there a reduction. We put a cap on, and, well, let's put it this way. We cut by 1/3 the maximum fee elderly people can be charged for an FHA-insured home mortgage. The gentlewoman knocks that out. We reduced the fee that elderly people can be charged by 1/3. The gentlewoman's amendment, now it's not her fault. She's not gratuitously trying to hurt older people. It's just she picked up this old amendment from a year ago, this old bill, and offered it without taking into account the progress that we've made. That's not a good way to legislate. I reserve the balance of my time.
The gentlewoman from Illinois is recognized.
Thank you, Madam Chair. Looking at the 2 bills, let's look at flexibility risk-based premiums. HR 1752 permits upfront or annual premiums or both. Premium rates may vary over a loan term if basis for change is determined at origination. Under your bill, the same. Requires annual report on risk-based premiums and how they were determined, authorizes premiums based on product risk. The maximum upfront premium amounts, HR 1752, 3% or 1.5% of annual premiums is at its maximum. Under your bill, 2.25% for standard risk and higher risk mortgages, 3.0 for 0 and lower down payment, 0 down mortgages for first-time buyers. And then the maximum annual premium amounts in the HR 1752, 2.0 or 1.0 if upfront premium is at its maximum. Under yours, 0.55% for standard and high-risk mortgages, 0.75 for 0 down mortgages. I think that, and then the limit on premium charge for certain mortgages. If a borrower has 3% cash contribution and a score of 560 or more, the upfront premium is limited to 2.25% and the annual 0.55%. And then under your bill, it's included by creation of the standard risk and higher risk mortgage categories. I guess we disagree on this, but I think, I want the same thing. I want FHA to be used. I want it to be used for low-income, first-time home buyers and those that are trying to refinance. This is critical right now, and I just think that there's some differences in what we have, and I would reserve.
The gentleman from Massachusetts.
Madam Chair, let me ask the gentleman from Illinois. If someone has weaker credit and gets mortgage insurance but makes all the payments for 5 years, why does the gentlewoman think that she should be charged more? And how does it hurt the FHA's ability to go forward if after someone has made the payments for 5 years, she gets refunded the extra? I would yield to the gentlewoman to answer that question, a fundamental difference on the bill.
I think under the bill, HR 1752, their premiums are reduced.
No, I asked the question.
They're not refunded.
Right, they're not refunded under your bill. They are under, the gentlewoman would not refund them. Why? How does it hurt the FHA in their ability to lend to people with weaker credit if they say to people with weaker credit, if you make your payments for 5 years, we will refund the extra we charge you?
If the gentleman will yield.
I yield.
Because the FHA is self-funded. It's not funded by the government or just, putting money into it so that they can do all these mortgages. It is self-funded, and it is an insurance program. Now, it's been, we haven't even been able to use it because it's been so capped in the amount of what they...
All right, well, we take back my time, because the gentlewoman is simply, I understand her answer. It is, if there's a higher loan loss rate for lending to lower income people, people with weaker credit, they have to subsidize each other. We say no. Raise the jumbo limit and let those people in California and Massachusetts and New York who are getting mortgages at $600,000 and $500,000, let them subsidize it. Nobody is subsidizing. You shouldn't have to subsidize if you're making your own payments. Let's do that out of the general system. I would yield my remaining time to the gentleman from California, the chairman of the subcommittee.
Gentlewoman from California is recognized for 1 minute.
Thank you very much, Mr. Speaker and members. Earlier today, we talked about how we've worked together so well in order to get the best possible legislation, and I'm just a little bit sad that this substitute amendment would reform for the Federal Housing Administration's FHA single-family mortgage insurance activities and would allow FHA to base each borrower's mortgage insurance premiums on the risk that the borrower poses to the FHA mortgage insurance fund with slight variations. Under this proposal, mortgage insurance premiums will be based on the borrower's credit history, loan-to-value ratio, debt-to-income ratio, and on FHA's historical experience with similar borrowers. This amendment maintains FHA reserves within the insurance fund to preserve the future solvency of the FHA program. I just rise in strong opposition to this amendment for the simple reason that H.R. 1852 is a better bill than the FHA reform bill that passed the House last year. And I could go on and on and on talking about why this is a much better bill. But let me just concentrate for a minute on...
I'm expired.
I think this would be a step backwards, and I would ask my colleagues not to support this amendment. It is not a good amendment.
The gentlewoman from Illinois is recognized.
Might I inquire how much time I have remaining?
You have 1 minute.
Thank you. I guess we'll have to agree to disagree that last year's bill would have served more borrowers. And we're moving forward here, so I would urge members to support my amendment, and I would yield back the balance of my time.
The question is on the amendment offered by the gentlewoman from Illinois. Those in favor, please say aye. Those opposed, please say no. In the opinion of the chair, the noes have it. The amendment is not adopted.
Madam Chairman, on that I would
request a recorded vote. The gentlewoman is recognized.
Madam Chairman, I would request a recorded vote.
Pursuant to Clause 6 of Rule 18, further proceedings on the amendment offered by the gentlewoman from Illinois will be postponed. Okay. Pursuant to Clause 6 of Rule 18, proceedings will now resume on those amendments on which further proceedings were postponed in the following order. Amendment number 5 by Mr. Hensarling of Texas, and Amendment number 7 by Ms. Biggert of Illinois. Thanks. The chair will reduce to 5 minutes the time for any electronic vote after the first vote in the series. The unfinished business is the request for a recorded vote on Amendment number 5 by the gentleman from Texas, Mr. Hensarling, on which further proceedings were postponed and on which the noes prevailed by voice vote. The clerk will redesignate the amendment.
Amendment number 5, printed in Part B of House Report 110-330, offered by Mr. Hensarling of Texas.
A recorded vote has been requested. Those in support of the request for a recorded vote will rise and be counted. A sufficient number having risen, a recorded vote is ordered. Members will record their votes by electronic device.
For the past couple hours, the House has been debating H.R. 1852, the FHA home mortgage bill. The underlying bill expands and makes changes, a number of changes to the FHA mortgage loans, including raising loan limits. We're opening up our phone lines for your thoughts on home mortgages in the wake of today's debate and also the current home mortgage situation, the subprime crisis. Our phone lines, our phone numbers are 202-585-3885 for Democrats, Republicans 202-585-3886, Independents and all others 202-585-3887. If you've called any C-SPAN program in the last 30 days, let others call in this afternoon and make sure that you mute your television when you do call in. This is a 15-minute vote. This is an amendment by Representative Hensarling of Texas, which would strike a provision allowing FHA to lend the surpluses from the FHA to go into an affordable housing fund. 15-minute vote. Before we take your phone calls, a little background on this bill and overall view with a Capitol Hill reporter who's been covering it. On the phone with us is Bill Swindell of Congress Daily. In the wake of problems in the subprime mortgage business, how is Congress responding?
Well, the House is scheduled this week to take up a bill that would overhaul the Federal Housing Administration, which insures mortgages, especially for those, the target audience is probably those maybe low income and more at risk. And the FHA program over the years has lost a lot of market share. Because it hasn't been able to offer new products and new policies and that has been picked up.
Seats, and I see about 15 people sitting there. It's because this doesn't really affect them. It affects people like you and I and everyone else on your show.
Well, give it a few minutes. This is a 15-minute vote, sir.
Well, I understand that, though, but this is a very important problem here. I mean, now, in my home state of Rhode Island, we've gone from 6 to 10 notices per day to 4, 5, and 6 pages of foreclosures. This is a pretty important issue right here, and you would think that they would all be in there taking care of the American public. You know, I mean, the government controls the economy. They're the ones spending the money. I think they should get very involved with the FHA because there are people that are having a very tough time trying to afford their homes.
A Republican caller next from Citrus County, Florida. You're on the air.
Hi, my name is Anita. And for about 6 years now, I've been on the Section 8 program. I'm 65 years old, and I was living on Miami Beach, and when I first went on it, I had identity theft on the Section 8 program with my voucher program. They had me on public housing, which HUD, and then the city of Miami Beach put me under their affordable housing community services. So it took a while until I caught it, and I reported it to the proper authorities, and it's still going on. I moved out here to Citrus County, and it seems that they're trying the same trick over here with that affordable housing. HUD is in charge of the United States Department of Housing, and it has to stay within the HUD program. The cities have to mind their own business because they cause all the problems, and affordable housing is causing problems also. The government has to take charge, and the money has to go back to the United States Treasury, and they have to do it the right way.
Rock Springs, Wyoming, a Democratic caller. Hi.
Hi, this is Mary.
Go ahead, Mary.
I'm with HUD right now, and they kind of upped my rent a little bit because I'm working at Walmart, and I'm on Social Security too, and I can't afford a house. I'm just renting an apartment.
Well, you've seen some of the debate today. Is this law going to help you any if it passes?
I don't know. I don't know if I can even get any loan to even get a house.
Warren, Ohio, Republican caller. Go ahead.
Yeah, good afternoon. Hey, the reason why I called is, how come nobody's talking about Alan Greenspan? He raised the interest rates, 17 times in a row? That's why we're having a housing problem. And I think somebody needs to get him in there on C-SPAN and talk to him about it, and don't let him weasel out of it. That's his fault. That's why we're having problems. He raised it up, I do believe 16 to 17 times straight in a row.
If you check our booktv.org schedule for the weekend, I believe the former Fed chairman is going to be on Book TV this week.
Can we make sure we get him? Can you erase my call today so I can call him then? Because I don't have a computer, and mine's broke down. I'm not going to buy another one for a while.
We will let folks know about that. Thank you, sir.
All right, thank you.
Raleigh, North Carolina, an independent caller.
Hi, I was just wondering, I'm a first-time home buyer, and I'm kind of watching the market, and I have been watching it for a couple of years. I haven't decided to make a purchase yet. Of course, I think it's probably a good idea that I wait, but I kind of wonder over the last couple of years when the prices were going through the roof and money was cheap, why didn't people take a little more responsibility for their purchases, let the buyer beware? I mean, aside from making loan terms a little more understandable, I think people should take a little more responsibility for the purchasing decisions.
Well, you may not be alone, sir. The Wall Street Journal reported this morning the Americans' mortgage debt grew in the second quarter of this year at the slowest pace in 9 years as the housing downturn put home borrowing under pressure, the Federal Reserve said yesterday. That's from the Wall Street Journal. We're taking your phone calls on this FHA bill that's being debated in the House today, that's been debated. A couple of amendment votes here. This one's a 15-minute vote, still a good bit of time left to get your call in, and we will continue taking your calls, likely in the next vote as well. 202-585-3885 for Democrats, Republicans 202-585-3886, and Independents 202-585-3887. Please turn down your phones. Go to Collin, Connecticut, a Democratic caller.
Hi, my name is Ed. I've been educated a bit about these mortgages. I have a daughter-in-law that's a mortgage originator in Maine, and they've been hit pretty hard percentage-wise on these types of loans that we're trying to help people with. The problem is really, I'm going to ask the question and give you my opinion too. Question is, aren't there laws on the book that prevent mortgage originators giving mortgages to people that they know can't afford to pay them? I think there is. There's probably a lack of enforcement. And one lady a while back, 5-10 minutes ago, mentioned, why not have the states take care of things? Well, it doesn't work too good that way. For instance, years ago, the states could originate interest rates on your credit card. They took that away. And as far as that bankruptcy law, the new one, that was really, everybody knows it was really written by the credit card companies and the banks. Well, that's my opinion. Thank you.
Thanks for it. Caller had mentioned Alan Greenspan's book. The Age of Turbulence is the name of his new book. You've probably read reports about it. We will feature that book on Book TV, C-SPAN 2's Book TV, Saturday at 7 p.m. Eastern, so you can tune in for that. We continue with calls while this vote continues. Willow Grove, Pennsylvania, Republican caller.
Hi, my name is Charlene Taggart, and I just wanted to say two things about the vote today. When they were talking about education, I think that a lot of people that took out these ARMs and didn't realize that if they had a 3-year ARM, maybe after 2 years their credit was better and it was time to refinance at a fixed rate. And I think that they should be doing these courses in high school, not a week or a year or a few months before somebody is interested in taking out a mortgage. I had a course like that in high school, and I never forgot it because it's everyone's dream when they're young to own a home. And I also think that if the mortgage companies weren't allowed to give loans to people that are buying homes that are much more than what they can afford, that these people that took out these ARMs wouldn't have gone for that kind of a loan, and we would still be in a little bit of this trouble, but not anywhere as much. Years ago, there was no such thing as an ARM. You got a fixed rate. You could even get a loan for 50 years. Now, of course, you can get a loan from anywhere from 15 years to, I believe, 30 years. But that ARM thing is just something to make the rich richer and the poor poorer. As far as this FHA, I've never been eligible for any of those kind of loans, though I think there's a lot of good people out there who are in the income brackets that do need some help and do deserve to own homes, too. We have a lot of workers in the United States, cash registers, and all kinds of jobs that don't pay that great. And those people should be entitled to loans, but they shouldn't have to pay more than everybody else just to get one.
Thanks, Pennsylvania. We'll try to get a couple more calls. Lavilla, Iowa is our next caller, independent line.
Hey, this is Blake Burke. Actually, I'm a Republican. I lost my house and my farm to a predatory lender. And I wasn't the only one because the state of Iowa sued them. They won the suit, and they're going to send me $245, yada, yada. That's not going to pay for my farm. But I tell you, I've got to take responsibility because when we did the signing, he explained the top copy of a stack of maybe 500 papers. And, you know, I understood everything just crystal clear. And then I did like 400 or 500 more signatures. And, you know, and by the time they get out of your driveway, they're throwing that top copy away.
So you think that's something
they could do with this vote is to make is at closing have someone in there that's genuinely knowledgeable and not on either party's side to explain things.
One of the amendments that was passed by Representative Tiberi of Ohio would let FHA provide financial counseling for borrowers when they apply for a mortgage. Just a few more votes here left in this particular vote, so let's continue with a call or two. We'll go to Lawton, Oklahoma. Go ahead. Oklahoma, you're on the line.
Yes, I'm a retired veteran. I'm calling. My wife had contacted y'all in reference to the fact that, we had borrowed money from home savings loan to purchase a home, and after 18 years of paying on this home, the mortgage kept getting shifted from one location to another location, to another loan association, and finally, it ended up with an organization that required us to send them several $1,000s for about 4 months. And when I inquired as to how much this was going toward my loan, which had went up from 48, it started off at 54,000. We had paid down to 48,000. It went back up to 56,000. I never borrowed any money against the house, but the house eventually was through the courts and everything took from us a failure to pay the amount of money that they wanted me to pay, which was $1,000 a month for 6 months, and then wait. And then we told, well, you have to pay several more $1,000 because we had to pay for our lawyers to locate the money that you say that you had sent to us that we lost. And they did lose the money. I sent them out at $2,000 that they just lost to pay my escrow in advance.
Oklahoma, I'm going to let you go there as we are seeing this vote wind down. We do want to let folks know if you're on the line, hang on. We're going to continue taking calls in the as the vote continues on the next amendment, the substitute amendment by Judy Biggert of Illinois, which would base the mortgage insurance premium on a borrower's credit history. A caller had asked about that. We also want to let you know, again, we had a call earlier about Alan Greenspan's new book, The Age of Turbulence. That's coming up Saturday at 7.
On this vote, the yeas are 148, the nays are 280. The amendment is not adopted. The unfinished business is the request for a recorded vote on amendment number 7 by the gentlewoman from Illinois, Mrs. Biggert, on which further proceedings were postponed and on which the noes prevailed by voice vote. The clerk will redesignate the amendment.
Amendment number 7, printed in Part B of House Report 110-330, offered by Mrs. Biggert of Illinois.
A recorded vote has been requested. Those in support of the request for a recorded vote will rise and be counted. A sufficient number having risen, a recorded vote is ordered. Members will record their vote by electronic device. This will be a 5-minute vote.
All right, a 5-minute vote on the amendment, the substitute proposed by Judy Biggert of Illinois, which would base FHA mortgage insurance premiums on a borrower's credit history. Again, the underlying bill, the federal home mortgage bill, would make changes to the way FHA administers and issues loans. It would raise loan limits, allow adjustments in borrower down payments and costs. And we are going to continue with your phone calls. 202-585-3885 for Democrats, Republicans 202-585-3886, and all others 585-3887, same area code 202. First caller we go to is a Republican caller, and it's Elkridge, Maryland. Go ahead.
Hello, my name is Mary Steen, and I'm calling because I'm currently laid off from this fiasco with the housing situation, which I personally think happened a few years back with this insane appreciation of houses, which became unaffordable for people with decent jobs. As far as the federal-backed housing, that has always been there. I have trained first-time home buyers. I'm well aware of the Maryland Bond Program for first-time home buyers, and there are ample programs out there. My question is, where is the federal government stepping in to police and monitor the fraudulent loan originators, the lying about people's incomes, or the real estate agents, or the appraisers that are just motivated by greed?
The AP reports today that an index that tracks developers' expectations of future home sales fell this month. National Association of Home Builders said its housing market index, which tracks builders' perceptions of current market conditions, dropped 2 points in September. We go now to New York, our independent line, New York City. Hi.
Hello. Good afternoon. Can you hear me?
Yes, go ahead, sir.
All right, fine. My comment is, how can we allow people to buy homes with no down payment? I think it already has led to a lot of problems, and it's going to continue to. These people have no equity in their buildings, so they're going to be. It's just irresponsible, I think, to have it to permit them to buy homes in this way. And they're tempted then to overpay for their homes.
Let's hear from a Democratic caller. Go ahead, Lake City, Florida.
Hi, my name is Marcana, and I've been hit by predatory lending also. I have a small farm in North Florida, and I was hit by a company called AmeriQuest Mortgage, and they bait and switch, changed things after the signing, didn't pay off our insurance, caused us to lose our home because of the hurricane. We're having a real tough time, and there's also another problem that's called mortgage servicing fraud, and that's a huge problem. One of your callers earlier was talking about their escrow account and things like that.
Right.
Well, they trick you, and they say they didn't get the payment, and then they charge you, and then they charge you attorney's fees and all kinds of other things, and people really need to look out for themselves these days.
Thanks, Florida, for the input. Trying to get a few more calls as this vote wraps up. Corona, California, a Republican caller.
Yes, hi. I'm calling in regards to, I was listening to a majority of them on here, and I've been researching and studying this for the last 4 years. I've had a clouded title pyramid sales schemes Romana scheme done to our property to where it's being looked at through the National Taxpayer Advocate Office. However, I think by passing this bill is merely just going to sit there and deliver more money to the lenders, and even though they're clouded titles and wash sales and they don't deserve to be done by trustee transitions. So one young lady said bait and switch, which is just a trustee transition, but what they're doing is carrying false notes rather than truthful notes. And the trustee that normally assumes the role of it, like Alliance Mortgage Company, as soon as they were reported, they changed their names to Everhome Mortgage, keep the same FDIC number. Instead of passing this bill and trying to get more money to justify the unaccounted, unaccessible amounts they're asking for these houses now, start holding the county recorder assessors accountable for their accepting false archives when it's reported by the rightful owners. They claim that they have no responsibility of it. California had a recall based on the fact of massive bureaucracy that was done by Iverson, and that was the governor's fault. However, question is where's the district attorney and the state attorney general overseeing the district attorneys, and why aren't the Supreme Court catching this in early warning detection of circumvented archives in the county recorder assessor's office? California, they're now selling apartments as condos, but yet they don't conform to the building codes. Now they're taking 680 square feet or 700 square feet, selling them for $200,000, $300,000, and yet they don't conform to the building codes to justify being deserved to be named as a condo when they have to be torn down to the footings and reconstructed. And so because of this, all the effects that take place on these real properties is now, with 680 or 700 square feet, it's now going to authorize them to take 31 and 3,300 square foot homes and sell them for $500,000 to $700,000.
Thanks, California. We'll see if we can get one more call here as this amendment vote winds down. Dallas, our Democratic line. Go ahead.
Hey, my name is Lisa Williams, and my question is that our house is in foreclosure at this moment. And when I bought this house, the appraisers made me feel that I was going to be living in a dream. And now that I feel like I've been cheated and I feel like I've been ripped or something, my mortgage went up, month after month after month, and me and my kids are going to be left on the street. And the way they're going to sell my house is cheaper than what the bank gave me a loan.
Vote's wrapping up, Dallas. Thank you.
On this vote, the yeas are 175, the nays are 252. The amendment is not adopted. And under the rule, the committee rises. Mr. Speaker.
House will be in order.
The Committee of the Whole House on the State of the Union has had under consideration H.R. 1852, and pursuant to House Resolution 650, I report the bill as amended by that resolution back to the House with sundry further amendments adopted in the Committee of the Whole.
The Chairman of the Committee of the Whole House on the State of the Union reports that the committee has under consideration the bill H.R. 1852 and pursuant to House Resolution 650 reports the bill as amended by the adoption of that resolution back to the House with sundry further amendments adopted in the Committee of the Whole. Under the rule, the previous question is ordered. Is a separate vote demanded on any further amendment reported from the Committee of the Whole? If not, the chair will put them in gross. The question is on adoption of the amendments. Those in favor say aye. Those opposed, no. The ayes have it. The amendments are adopted. The question is on engrossment and third reading of the bill. Those in favor say aye. Those opposed, no. The ayes have it. Third reading.
A bill to modernize and update the National Housing Act and enable the Federal Housing Administration to use risk-based pricing to more effectively reach underserved borrowers and for other purposes.
For what? The House will be in order. For what purpose does the gentleman from Georgia rise?
Mr. Speaker, the House is not in order.
Gentleman is correct. Will members clear their well, please? The gentleman deserves to be heard. For what purpose does the gentleman from Georgia rise?
Mr. Speaker, I have a motion to recommit at the desk.
Is the gentleman opposed to the bill?
In its current form, I am.
Gentleman is qualified. The clerk will report the motion.
Mr. Price of Georgia moves to recommit the bill, H.R. 1852, to the Committee on Financial Services with instructions that the committee report the same back promptly with the following amendments. Page 64, strike line 6 and insert the following. 4, Affordable Housing Fund. A, in general. For each fiscal...
Gentleman is correct. Clerk will read.
B, limitation on use of funds. I, in general. Amounts made available pursuant to subparagraph A for affordable housing fund referred to in such subparagraph may not be used for or on behalf of any individual or household unless the individual provides, or in the case of a household, an adult member of the household provide personal identification in one of the following forms. I, Social Security card with photo identification card or Real ID Act identification. A Social Security card accompanied by a photo identification card issued by the federal government or a state government, or B, a driver's license or identification card issued by a state, in the case of a state that is in compliance with Title II of the Real ID Act of 2005, Title II of Division B of Public Law 109-13, 49 U.S.C. 3301 Note. 2. Passport. A passport issued by the United States or a foreign government.
The House is not in order.
Gentleman is correct. Will members please take their conversations off the floor? Clerk will read.
3. USCIS Photo Identification Card. A photo identification card issued by the Secretary of Homeland Security, acting through the Director of the United States Citizenship and Immigration Services. I. Regulations. The federal office responsible for administering the Affordable Housing Fund referred to in subparagraph A shall by regulation require that each grantee and recipient of assistance from such fund take such actions as such official considers necessary to ensure compliance with the requirements of Clause I.
The House will be in order. Gentleman from Georgia is recognized for 5 minutes.
Thank you, Mr. Speaker. Mr. Speaker, this is a common-sense motion to recommit that would require that any individual or household receiving money from the Affordable Housing Fund must present verification of legal residency by a secure identification document. Americans believe that it's appropriate to ask those receiving hard-earned taxpayer dollars, taxpayer assistance, that it's right to establish that they are legal residents of the United States. It's common sense. Across the country, whether it's Denver, where in 2006 there was an estimated 20,000 illegal immigrants holding FHA-insured loans.
Gentleman will suspend. The House will come to order. Gentleman from Georgia.
In Denver, where in 2006 there were an estimated 20,000 illegal immigrants holding FHA-insured loans, or L.A. or Atlanta, where similar activity occurs, illegal immigrants are being given unprecedented access to taxpayer benefits and taxpayer money. In many of these cases of FHA loans, the documents submitted with their applications later proved to be false. Resident alien numbers that never were issued, or Social Security numbers belonging to other people, or W-2 forms that were fabricated. In the case of financial institutions, minimal documents are required by their regulators to establish a new customer's identity to open accounts. Mr. Speaker, the House isn't in order.
Gentleman is correct. The gentleman from Georgia deserves to be heard. Will members on both sides of the aisle take their conversations off the floor? Gentleman from Georgia.
Thank you, Mr. Speaker. The current loopholes in federal law are an invitation. They're an attraction. They're a magnet to illegal immigration. We must not reward those coming here illegally by allowing them the services that ought to be only afforded to American citizens, and they're here legally. If we do so, this results in backdoor amnesty. This motion to recommit would require that the federal official responsible for administering the Housing Trust Fund to ensure that any assistance provided from the Affordable Housing Fund must require that all adults are legal residents of the United States. Simple, common sense. Recipients may use one of 3 different forms of identification. These forms are considered the most secure types of identification because they're harder to forge or to duplicate. They're all issued by a government agency which has more checks and balances preventing illegal immigrants or criminals or terrorists from obtaining these documents. Everyone who is in the United States legally can easily obtain one of the 3 identification forms, but illegal immigrants, criminals, and terrorists would have to go to significant length to receive one. Now, we've offered this type of amendment to bills in the past on this floor, and it's needed on this bill as well, as there appears to be no end in sight to the appetite of our friends in the majority to provide taxpayer benefits to illegals, against the will and against the desire of the American people. Now, you'll hear that this MTR, this motion to recommit, provides for the committee to report back promptly and that would, quote, kill the bill. Well, we all know that's not true. In fact, The Speaker has previously ruled that any bill adopted with this language could readily be returned to the House floor with the new language. You'll hear that those already here illegally cannot get federally subsidized benefits. Then, because it's clear that there are currently some loopholes in our current system, we ought not have any problem adopting more enforceable criteria for legal documentation. You'll hear that if you don't drive or you don't travel to foreign countries, that this is an undue burden. But the American people don't believe that it's inappropriate to ask those citizens receiving federal taxpayer assistance to first establish that they are a legal resident of the United States. You'll hear that this might lead us down the path to using the Social Security card as a universal identifier. But if you read this motion, what it does is simply provide for an array of options for secure IDs that all Americans and legal immigrants have ready access to. Simple common sense. You may hear that it's already in the bill. Well, in fact, it is, Mr. Speaker, but it doesn't cover the Affordable Housing Fund. The current regulations to establish a customer's identity do a disservice to the American people. Greater clarification in this area will help stem the tide of illegal aliens. The federal government should not be operating under obscure parameters that do not serve our nation. We can and should strengthen these regulations to protect the American people. This is a much more appropriate solution to the problem of backdoor amnesty than simply saying that we're not going to let illegal aliens live in government-subsidized housing. To the best of our ability, we must eliminate using hard-earned American taxpayer money to subsidize illegal activity. This motion to recommit does just that, and I urge my colleagues to support the motion, and I yield back the balance of my time.
Gentleman yields back the balance of his time. For what purpose does the gentleman from Massachusetts rise?
Speak in opposition to the motion to recommit.
The gentleman is recognized for 5 minutes.
Mr. Speaker, I ask the members to follow closely because there is some unusual twists and turns even to this. In the first place, the gentleman talked about people getting FHA loans who weren't here legally, and he made a big point of that. As he later acknowledged, the bill as reported already deals with that. The gentleman from Georgia is so enamored of this amendment that he's offering it twice to this bill. Now he's making up for the fact that last week he wanted to offer it and couldn't. The gentleman from Georgia had filed in the congressional record a version of this amendment to offer to the Native American housing bill to prevent illegal immigrant Native Americans from sneaking in. And
Gentleman yield.
When we pointed that out, the gentleman from Georgia for once thought better of it and withdrew, didn't offer the amendment. I think he was afraid that the Indians would have said, you know, sir, that's a good idea. Why didn't we think of it?
Will the gentleman yield? Will the gentleman yield?
No. But now in the amendment, in the bill, the gentleman offered this amendment in committee. So the illustration he gave of how they are getting FHA loans when they shouldn't, that's already in the bill. What he's done now is to say that this should apply to the Affordable Housing Trust Fund, which is not created by this bill. The bill does say that if we later, on the floor of this House, create an Affordable Housing Trust Fund, funds from the FHA excess, if there are any, will go into it. So there is plenty of time when we deal with the Affordable Housing Trust Fund. So last week he couldn't offer the amendment to keep the illegal immigrants out of the Navajo housing. This week he's already got it in the bill that covers the bill that's before us, but he's now got amendment envy in the worst way, so he's going to offer it to a program that doesn't exist yet, preempting our chance to do it. Even that wouldn't be a problem, except he could have said forthwith. He said promptly. It doesn't kill the bill, it significantly delays it. If this comes back to the Committee on Financial Services, it is now wide open. The committee then has a hearing, a markup, and any amendment can be offered. And I will tell my colleagues that there are members, yes, there's your indication of what will happen. This will be filibustered again. Thank you for your honesty. I appreciate it. If this bill comes back to committee, it will be wide open. We're in the midst of a crisis. The president said last month, please pass the FHA bill promptly. Even the United States Senate is now acting on this bill. If it comes back to committee, I have 3 days to notice a markup. How quickly can we do it? Well, I don't think I can have this markup on Yom Kippur. There may be a lot to atone for in this amendment, but I can't have it on Friday. So we go over to next week. We have markup scheduled for next week on Hope 6 and on flood insurance and other important issues. So we couldn't get to this for a couple of weeks, and then when we do get to it, the clappers over there are going to offer a whole bunch of amendments. Now, if the gentleman just wanted to put this into the program that doesn't yet exist, and that he'll have a chance to do it later, he could have said forthwith. Members are asked when they rise on a recommit, are you opposed to the bill? The gentleman from Georgia honestly answered that he is. And he used the choice he had to substantially delay this bill. No, not kill it, but this will delay this bill by several weeks in the midst of this subprime crisis. And I would say to members, preventing the FHA loans from going there, that's already in the bill. Read pages 54 and following. The Affordable Housing Trust Fund, it will be created later. I'm sure the gentleman will offer that amendment again, and you'll have a chance to vote on it now. So the sole effect of voting for this recommit is substantially to delay the bill on the FHA, because the program that the bill covers, this amendment applies already from the committee. And the program that he would apply it to is not yet in existence and won't be in existence until we vote. And for members who are worried about some cheap shot ad that says, oh, well, promptly, forthwith, too complicated, I hope people don't vote for this amendment. Many of them will. You'll have a chance to vote for it. Long before the next election, the gentleman from Georgia will have offered this amendment 4 more times.